Hey, hey, check, check. 1, 2. Hey, hey. Hey, hey. Check, check, Andrew. Check, check. 1, 2. Hey, hey, check. Check, check. 1, 2. Hey, hey. Check, check. Hey, hey. 2.
Good morning, good morning, good morning. Welcome to SHaDPitch 2023. Please take your seats. The show will start in a minute. Please welcome and take your seats. Hello and welcome to SHaDPitch 2023. If anybody has a satellite phone or anything emitting a frequency besides their cell phone, we need it turned off, please. If you have a satellite phone or anything transmitting a frequency, please turn it back. Hello and welcome to SHaDPitch 2023. We'll be starting in 1 minute. 1 minute. Are we all ready for today's competition? Please welcome our SHAD host, Jen Clark Fugalo, Vice President of Advancement at the American Hotel and Lodging Foundation.
Everybody here is lovely.
She's brilliant and bold, got talent untold. Every woman lives a spirit. She's leading the way, she's winning the day. Brighter than gold, she has a deal. She has a deal. She has a deal.
2023, the fourth annual She Has a Deal pitch competition, and we are on day 2. I must say that it's raining outside here in Bethesda, but we are all smiles here inside, dry and sunny. So happy to have everyone here. You're probably wondering why I'm standing on the stage. I'm with the AHLA Foundation, and we aim to inspire, support, and advance the hospitality workforce. This includes women's focused initiatives that help propel women into leadership positions. So on behalf of the entire industry, I am super, super honored to be here today with all of you for this marvelous event. But more importantly, thanks for supporting She Has a Deal and each of our 9 talented finalists who will be competing on stage today in 5 teams. These fabulous, smart women will be pitching their hotel investment deal to our esteemed industry panel of judges. More about the judges in just a minute. I do have to give a shameless plug. My boss, I think she's watching on the live stream right now, and she would kill me if I didn't mention. When I saw the list of finalists, I noticed that one of them actually was a recipient of the AHLA Foundation's scholarship. So proud of her, but proud of everyone that is here. So every single woman you'll hear from today is already accomplished in their own right, and now they're vying for a grand prize that will surely make a positive difference in catapulting them in their journey to hotel ownership and development. We're talking about $50,000 in deal equity from the SHAD Prosperity Fund. Then the second place gets a cool $5,000 also. So this is the real deal, folks. She Has a Deal was founded by Tracy Prigmore with the simple goal of increasing the number of women who own and develop hotels. The mission is a movement to transform the hospitality industry by creating new pathways to hotel ownership and development for women. The SHAD team engages in this transformative work 3 main ways. First, exposing women to the possibilities of hotel investing by educating them on the steps to take, plus instill the belief that it's within their reach, because if you see it, you can believe it, as my mom likes to say. Second, building a network of collaborators, mentors, and sponsors who will advocate for these women throughout their journey. And third, accessing and unleashing the capital resources required to close deals of stature and significance. Today, you'll experience a culmination of these finalists' hard work over the last year. Yes, I said a year's worth of work. You'll find that they are extraordinarily dedicated, passionate, purposeful, and collaborative in their prep process. And impressively, somehow they managed to do all of this while continuing with their day-to-day lives. I don't know how they do it. So let's congratulate them all for arriving at this moment in their journey to hotel ownership. All right, briefly, I mentioned the SHAD Prosperity Fund. This fund is a new investment destination that will assist women in getting financing for their properties. So if you want to get involved or see what female-led hotel projects are in the pipeline, head on over to the website shown behind me, shehasadeal.com/investment destination. All right, on to the competition. I mentioned that we have 5 teams. Now let's get to know our panel of judges. These 5 folks are seasoned experts in our industry and represent a mix of fields. The panel will be selecting the winner of the competition by evaluating each team's pitch for its persuasiveness and the overall feasibility of the deal. So while these women are not expected to close the deal necessarily, the judges will be assessing how well the participants mastered the concepts of the hotel investments. All right, you ready? Here come the judges. We have Kara Randall, Managing Director, Luxury Lifestyle and Mixed-Use Development for Hilton Hotels. Hi. Matt Crosby, President, Stonehill Strategic Capital. Darian Wright, former COO of Brookwood Hotels. John Lancaster, Vice President of Development, Emerging Markets for Choice Hotels. and Tara Waldier, Senior Vice President of Rockbridge Capital. Let's give them a warm welcome. Thank you, judges. Everyone here, especially our panelists or our finalists, appreciate the time and thoughtfulness that you have put into today's competition. Your mentorship, critiques, and questions are critically important to these women as they refine their pitches in pursuit of hotel ownership. So thank you for your time. Today's competition is a key component of the She Has a Deal platform, created so that these women are all armed with the confidence and competencies required to secure these ownership, development, and investment deals. Here's what we can look forward to for today. Each of the 5 teams will present their deal to our panel of judges. The judges received a copy of their pitches in advance, so they had a little bit of pre-work done, along with the financial models in Excel that the team used to underwrite their deal. Each pitch will be 15 minutes, followed by 10 minutes of Q&A with the judges. Okay, great. All right, so we're going to take a pause to see how this all works.
Development for women. Women represent an extraordinarily small percentage of hotel owners, and we want to change that. She Has a Deal's signature event is a hotel investment pitch competition for women. How does it work? The process starts when women apply to participate in the pitch competition as individuals or small teams of up to 3. Once accepted, each pitching team comes up with a name and is assigned a coach to help them through the competition. Over several months, competitors are given exclusive access to hotel investment education that is not taught in schools. Educational content is delivered by SHAD luminaries, industry experts in field development and hotel operations. In addition to learning from these luminaries, pitching teams are meeting potential mentors and future collaborators to whom they would not otherwise have access. SHAD's educational modules are taught in the form of master classes and cover every aspect of sourcing, evaluating, financing, and closing a hotel investment deal. The teams are given a unique financial model developed by hotel owners that walks them through projecting revenues, expenses, and ultimate return on investment. At the end, each team will have identified and analyzed a real hotel project in preparation to pitch the deal to a panel of investor judges. The winning team is awarded deal equity, meaning partial ownership of a real hotel. While only one team wins, every participant walks away from the She Has a Deal experience with a depth of knowledge and a bank of new professional connections that can't be found anywhere else.
All right. So for our audience, whether you are here in person with us or you're watching the live stream from around the world, your input is really crucial to today's pitches, as 5% of the team's overall score will be based on how you, the audience, rate each team's pitch. So please plan to engage with us by evaluating each team immediately after they finish your pitch, and also provide constructive written feedback on their presentation so that we can help them soar in the future. They are very much open to that constructive feedback. Additionally, at the end of the competition, you will ultimately vote for your favorite pitch for the Viewer's Choice Award. And today, that should be around 12:30 p.m. Eastern. Also, if you participate in ranking and voting and you provide your details, you're entered to win some cool prizes, whether it's from the raffle, and these are all supported from our generous sponsors. All right, so after each pitch, following a 10-minute Q&A with judges, you'll simply follow the link on the screen. There's a QR code behind me, and this platform allows you to rank each pitch and provide feedback. And again, make sure that you're engaging in this, one, to ensuring that you're providing that critical feedback, but also this ensures that you can enter the raffle prizes to have free hotel night stays at some of our great properties. Also get SHAD merch and some other fun gifts. All right, we've got this event covered from the stage, but we're also have it from the backstage at all angles. We have Genesis, former SHAD 2022 Today's Women Pitch competitor, and also the founder of Genesis House, an exclusive wellness retreats and boutique hotels company. She is here to give us a little behind-the-scenes perspective from our finalists. So we've got this covered from all angles, which is great. All right, before I turn it over to the first pitch team of the day, let's give it up for the creative inspiration and founder of She Has a Deal, Tracy Prigmore. She will be interviewing key industry luminaries in her now famous SHAD Talk. So welcome, Tracy.
Thank you, Jen. Good to see you. Thank you. Good morning, everyone. I am so excited to be here another day with all of you. We had an incredible pitch day yesterday with the Today's Women, and I'm just as excited for all the young women who will be pitching today. And I'm also thrilled to be here at the Marriott World Headquarters, and we so appreciate that Marriott wanted to host us this year. It's important for me also to acknowledge that Marriott was embracive. When I came up with this concept, when it was just a concept, I went to Marriott. I was speaking with Eric Jacobs, who was head of development at the time, and I pitched him this opportunity to create She Has a Deal. And after maybe 5 minutes into my pitch, he was like, we're in. And so it was with the support, financial support of Marriott and the confidence they gave me to create She Has a Deal that we're all here today. And I'm grateful to all of our sponsors who are helping us to make this movement possible. And also especially to Bill Fortier of Hilton, who also invested in the vision very early on. And then Tyrone Stoudemire and Ronisha Goodwin from Hyatt, they helped to fuel the mission as well very early on. So it's amazing what can be accomplished when we work together as an industry and make the commitment to elevate women. We have more to accomplish on this journey, and I look forward to our next phase in the movement. So let's all get it started. Thank you.
Woo! All right, you feel the energy rising. It is time to kick off pitching. First up, we have aspiring hotel owners Isabella Sufrafridi, Veronica Lewis, and Alexandra Newman from Team Crown. They are all from Cornell University and are pitching a Town Place Suites in the market of Houston, Texas.
I'm Isabella Sefratini, and I'm from Farmington, Connecticut.
I'm Veronica Lewis, and I'm from Saratoga Springs, New York.
And I'm Alexandra Newman from Orange County, California.
We
are Crown from Cornell University. I've always had an interest in giving back to my community and helping others, and also real estate. And when Tracy Prickmore came to talk to us at school, I was inspired to start the process and just get into it and take that jump. I've always been interested in making a positive impact on my community through real estate development in senior living and in hotels. And hearing Tracy Prickmore talk at our Dean's Distinguished Lecture Series, I really saw SHaD as a great way to start that journey.
Hearing Tracy Prickmore speak at the Dean's Distinguished Lecture Series really inspired me to join She Has a Deal and learn more about real estate development.
This program has really taught me the foundations of real estate development, and through their hands-on experience, I've learned skills that I'll be able to apply to my future career.
I think that I've really learned a lot about real estate development and following a deal from start to finish.
I think this program has really taught me camaraderie and group skills that I otherwise wouldn't have learned, and it's also given me the skills and foundations necessary to build my future career. In terms of my career, I really want to go into corporate hotel business and eventually open my own bakery when I'm older.
I would like to be a professor here at the Cornell Nolan School of Hotel Administration and hopefully one day become the dean.
In the future, I hope to be in real estate development for hotels and senior living.
All right, please welcome Team Crown to the stage.
Perfect. Hello, good morning. Thank you all so much for being here today. We are Crown, and today we'll be presenting to you the Town Place Suites, Houston, Northwest Beltway 8. I'll have the clicker. Do we have a clicker? Thank you.
Thank you.
Sorry. Perfect. So, just a little bit about our team. We are all currently students at the Nolan School of Hotel Administration at Cornell University. My name is Alexandra Newman, and today I'm joined by my amazing friends and teammates,
Veronica Lewis
and Isabella Sefratini. Perfect, let's get into it. So I'm going to start off and pass it off to Isabella to get us started.
Thank you, Alex. So throughout the course of our presentation today, we are going to start out with our investment summary, move into our offering overview, our market analysis, our financial analysis, and then some concluding statements. So right away, I want to introduce you to this investment from a financial perspective. So for this investment, you're looking at an internal rate of return of 17.7%, a multiple on investment capital by 2.25 times, and a cash-on-cash return of 6.78%. we are looking for a $2 million investment into this project. And as you will see throughout the course of the presentation, it presents a very promising return on investment. So as for the investment summary, this purchase price of the hotel is $7 million, and the total investment cost is $8 million, with $100,000 of that about being invested in your initial capital investments. This is in replacement of what usually would be a PIP because the hotel is only 2 years old. The acquisition price per key is about $80,000, which is half of what it costs to build a new TownePlace Suites in the Houston market. A new Houston TownePlace Suites costs $160,000 per key, and this is about $80,000 per key. So I will pass it off to Alex for our offering overview.
Perfect, thank you. So this hotel is a brand new build in the Houston area, built just 2 years ago in 2021. It's part of the TownePlace Suites, which is under Marriott International. This property has 92 keys with rooms ranging from 305 square feet to 453 square feet. And this hotel offers so many amenities such as the pool, grill, and a fitness center. So TownePlace Suites is an extended stay brand under Marriott International, which builds a great rapport for our hotel and brings in a lot of customers. It's an extended stay brand that's targeted towards business travelers and corporate travelers and extended stay travelers, which is great for our market, as Veronica will get into later. The average RevPAR index for the brand is 113.9, and it's currently unencumbered by a management company. Now, the city of Houston actually owns and manages the hotel currently, so our plan for the hotel is to hold it for 5 years, signing with new management. We plan to sign with Driftwood Capital because of the large portfolio of TownePlace Suites that they currently manage, specifically in the Texas area, and because of our connections to the company currently. They're going to implement new management and new training for a hotel, bringing up the profitability up to what market standards are and pre-pandemic levels. And now I'll pass it off to Veronica to talk about the market.
Thank you, Alex. So we are looking at a really strong market in the Houston area, specifically our Northwest Houston area. The Houston market is so strong, leading to a lot of tourism growth in recent years. We're looking at an overall population of Houston of about 2.29 million people, a $1.1 billion generated revenue from all of the businesses based in Houston. 26.7 million tourists visit Houston every year, and an average of 4 events, which I'll visualize for you later, occur every month directly near our property, which is about 10 miles from our property. First, I want to point out the large corporate presence directly near our property. As we know, TownePlace Suites is a largely business and extended stay demographic, meaning that this corporate presence is imperative to our success. We not only have the UPS, Home Depot, and Amazon distribution centers right nearby, but I also want to point out the NRG TH Wharton plant right nearby our hotel. This, along with another renewable energy plant, will help to our hotel succeed. As we know, Houston is heavily reliant on the oil and gas industries. This switch to renewable energy that is on a global scale will be supported by the NRG TH Wharton plant and the other renewable energy plant right nearby. Here's that visualization I was talking about before. So I just want to point out all of the events that occur within 10 miles of our property. First of all, there's the Chevron Houston Marathon, which draws hundreds of thousands of runners and spectators every year. The Holly Festival and the Houston Rodeo, which just occurred this month, which draws over 300,000 spectators. And then the month of November alone draws over 1 million different tourists, starting out with the Day of the Dead celebrations at the beginning of the month and bringing in the Christmas season at the end of the month. So to get into our competitive set, the first thing I want to point out is that our hotel is the closest hotel in the competitive set to the airport. The George Bush International Airport is about 20 minutes away, 20-minute drive. The only other hotel with a comparable distance is the Comfort Suites Northwest Beltway 8, and that is also the oldest hotel in our competitive set. Our competitive set is relatively spread out, as you can see. This is because there's not a lot of market penetration for business traveler and extended stay hotels, which is why we have such a great opportunity in this market to succeed. So our historical market data includes market ADR, occupancy, and RevPAR. As we all know, the hospitality industry worldwide took a huge hit in 2020 as COVID-19 shut down the entire world. However, the Houston market is recovering really well and growing very strongly, and is expected to recover to 2019 levels by 2024. This is important for our hotel because, as Alex mentioned before, we are owned by the city of Houston. This is because the hotel was part of a tax increment reinvestment zone and was used as an urban renewal bond. Now that the market is rejuvenated, the city of Houston is trying to divest of this asset, and we are hoping to sign with Driftwood Capital because this hotel will help our hotel exceed market standards, including ADR, occupancy, and RevPAR, which Bella will get into next with her financial analysis.
Perfect. So to bring us back to the finances, I want to introduce you to our debt structure. For our debt structure, we will have a 65% senior debt to loan value from JP Morgan. This will have an 8% senior debt interest rate and a 25-year amortization on the loan. Now, we chose JP Morgan for our debt because we trust them and we have many connections with them through our school. Now, for occupancy, ADR, and RevPAR, as Veronica alluded to, they will all be growing steadily from 2023 to 2027 over the 5 years that we are holding the property. RevPAR is projected to increase about $30, and this is catalyzed by the ADR and the occupancy growth. Now, this moves right into our occupancy, ADR, and RevPAR indices. These are all also projected to increase steadily over the 2023 to 2027 period. Now, these will all end when we sell the hotel at around 100, but that is because of the great growth, because the property currently is much lower than the rest of the market because, as Veronica said, the city of Houston is not exactly a hotel operator. Now, to move in to our projected return on investment. What you're looking at for this return on investment is an annual ROI of 13.4% and a total investment ROI of 66.7%. The sales price of the hotel will be around $10.5 million with net proceeds of $5.4 million. You'll be getting $5.4 million in 5 years. And I want to re-emphasize that the cost per key of this hotel, a 2-year-old property in Houston, is half of what it costs to build a new one. Now we'll pass it off to Alex for some concluding statements.
Thank you. So just to recap everything my teammates have mentioned, this is a very profitable investment and super promising. With a 17.7% IRR, a 2.25 times multiple on invested capital, and a 6.78% cash-on-cash return. It's a brand new build in Houston, only 2 years old. We're holding it for 5 years, signing with Driftwood Capital, with a total investment of $8 million. TownePlace Suites is a brand that targets extended stay travelers and business travelers, which is great because the market attracts many tourists and has a big corporate presence nearby. The occupancy, ADR, and RevPAR are all expected to increase in the next 5 years, giving you a return on investment of 13.4% annually. Thank you so much for coming, and we'll now take any questions that you may have. Thank you. Good.
All right. Well, thank you, Team Crown, for kicking us off today. I feel like I should name you Team Queen or something. I don't know. Is that appropriate? All right. Now we're getting to the Q&A. I thought it was interesting. I would love to hear the judges' thoughts on the uniqueness of the fact that the city owns the hotel.
Yeah.
I saw some heads nodding. So anyone would like to go first? All right, Darian, you're up.
Great job, ladies.
Thank you.
Question for you. When you look at your comp set, so I saw that everything looked like it was kind of to the southeast a little bit. So I'm curious, talk to us a little bit about what you're seeing on the horizon in terms of incoming supply.
Yeah.
And then 2, follow behind that, what's your plans in terms of tapping into that length of stay? Because as you know, with the extended stay, you should be getting into 10 plus nights, if you will.
Right.
So talk to us a little bit about that.
Do you want to start with competitive set?
Yeah, sure. I can start us off. So our hotel, yes, our comp set is pretty spread out. There are not a lot of extended stay or business demographic hotels in that corporate area right on Northwest Beltway 8. And so a lot of the surrounding business there is from different corporate offices and also that energy plant. So people are trying to capitalize on that and get in there. Our TownePlace suites already exists, and we're seeing a definite increase in supply in coming years just because of the new energy plant coming in, the existing plants, and then we're seeing a lot of new business kind of being rejuvenated in the area as we recover from COVID. Yeah. So we're definitely seeing a lot of increase in supply.
And part of the
But on that note, is it new hotels or just new demand drivers?
New demand drivers.
And it's also, we do see that because the price per key to build a new Town Place Suites in Houston is so high, we are seeing new hotels wanting to move into that area. But the benefit of this property is it's already there. It's pretty much brand new, and it's half the price of what it would be to build a new one.
Yeah, it's already established.
Yeah.
John.
Yeah, so you mentioned that the city of Houston owns this.
Yeah.
Yes.
And they have given probably new market tax credits and TIFs. Was that factored into your financial model and pro forma, whether they were going to pull those tax credits back or were they going to continue?
They're not pulling those tax credits back. So they are just divesting this asset.
Yeah.
There's no ties to the city. And we actually didn't fully understand at first that it was built. It was owned and operated by the city of Houston. At first, because it's nowhere in the deal. And in the financial metrics, you wouldn't be able to tell. Not until we started looking at the memorandum, the offering memorandum, and all of the documentation, it's when we realized that it was owned by the city.
Yeah, so yeah, they just kind of put the hotel up so that they could start kind of bringing more people in and to grow grow tourism and stuff after the pandemic. So now they're just trying to get rid of it and sell it so that we can, make it actually profitable.
Yeah.
Matt.
I think it's really interesting contrarian play in Houston, Energy Corridor, Willowbrook. To your point, I'd argue maybe even below half a replacement cost.
Yeah.
It's a great basis and a great opportunity with upside with the city owning it.
Yeah.
They truly manage it, or do they just own it?
Yeah.
They do. Not well.
No, not well.
But yes.
Yeah. We did a little research ourselves and found, and we
Called
talked
the
to the
city.
broker.
We very much annoyed
A lot
the
of
city.
calls made.
But yes, they do manage it.
Yes.
Okay, that really interesting, great opportunity,
Yeah.
and especially bringing in driftwood. And I guess the second point of that is, I guess you're really banking on the upside and the recovery of that Willowbrook Energy Corridor market, which has struggled tremendously, and there's been a lot of noise around that market.
Right.
Can you talk more about that immediate sell market with the comp set being a little bit more spread out? Just what you're specifically seeing in terms of performance within that immediate comp set and just new demand drivers specifically.
Yeah, and we're not heavily reliant on that renewable energy area. We also have the corporate presence there from UPS, Home Depot, and Amazon, and there's also even like the Sam Houston Race Park is right there. So there's a lot of things that can draw people to the area and demand generators. But what we're seeing is as the whole world shifts from fossil fuels, those two plants will help to support our hotel specifically in our area and keep it from struggling as Houston shifts from oil and gas.
There's also a lot of new businesses being built because of the plant, and there's also a lot of schools around, so the Town Place Suites makes sense because of the extended stay.
Yeah, Lone Star College nearby.
And to your question earlier, we will be able to get those 10 plus nights because of that.
And those plants are newer plants?
Yes.
Tara.
I thought you guys did a great job.
Thank you.
I like the deal profile. You get a brand new asset without the headache of having to build it. Get in there, get to the cash flow quickly, especially at that basis, like you said. And I noticed your exit value was still below replacement cost, so there's probably some upside there for you. One of my questions, it is a new asset. It's managed by the city of Houston, as you pointed out, less than ideal for you. But once you get in there and you'll ramp the cash flows up, one of my questions was, in your immediate year one, are you covering your debt service or have you capitalized an interest reserve to make sure that you are able to pay your debt in that first year?
Yeah, we are. Because of how low the hotel is performing right now, we're able to earn that money back right away. And I mean, as I pointed out earlier, the total ROI for the entire investment is 66.7%. So it's a 5-year investment, and we're able to pay the debt service in the first year.
Kara.
Good job, ladies.
Thank you.
I'm also an alum, but not.
Oh, yay.
So my question was, I saw that the JP Morgan comment with special incentives for the hotel pool. You can elaborate on that, and also when you price the interest rate last, I think it might have moved.
Yeah. So JP Morgan also is the biggest bank in Texas, which is another reason that we chose it, being that it's very popular down there. But we do have personal connections with the company through our school, and Bella can talk more about that.
Yeah, the last time that we did price that was a couple of months ago.
Yeah.
We do understand that the interest rates may have gone up since then, so we would re-look into that. Either way, because of the profitability of the investment, we do not think that it would impact it so much that it would not still be very profitable.
And I guess as a follow-up, what kind of contingencies did you build into your model?
For the contingencies, if we don't go with JP Morgan, if we pick another debt service, if we don't go with Driftwood Capital, which we think will not be that much of an issue because they own so many Town Place suites, we have other banks that we'll fall back on because of the profitability of the investment. We believe that we'll be able to find other banks for it, and also because JP Morgan is so large, those smaller banks may be more appealing to the investment. Yeah.
Great. Any other questions? Awesome. Well, Team Crown, congratulations. You were the first up. Very brave. Very brave. Awesome. Thank you. All right, let's have you go catch up with Genesis backstage to see how you thought it went.
I was scared of the question.
So, audience in the room, really quickly, audience in the room, now it is time to vote, whether you are here or at home watching live stream. First pitch is done. Your turn to get engaged. You've got 10 minutes to rate and comment, so scan the QR code on the screen for pitch team number 1. The app will take you to rate the pitch. All right, now let's go back to Genesis, who's catching up with Isabella, Veronica, and Alexandra to get their thoughts on how it went.
Hello, ladies, you did so amazing. How do you feel?
Great.
You're the first ones. So I want to know, what is the most important key takeaway that you learned while you were preparing for this pitch?
Can I?
Yeah, absolutely.
So every week we had something that we called SHaDPitch.
I love it.
So it was really just about the teamwork and kind of figuring out, at the beginning we weren't really able to collaborate together because we all have such busy schedules. Yeah. But honestly, just blocking out time to be together, to bond, to work as a team, that's the most important thing. Just having that team dynamic was really helpful and important, and I'm going to miss SHaDPitch.
Yeah. You guys can still do SHaDPitch.
Yes. Also just, getting people on your team that truly understand you and your work style, and getting together a team that works well together, I think was really
That's so important for this industry, because we went through 5 deals before we found the one that we wanted to end with, and by the time we reached this, not only were we prepared from a financial and had some experience perspective, because we went in with none, we also were prepared with an understanding of what everyone's strengths were and how we could play off of that.
I love that. Well, amazing job.
Thank you.
Good luck. Talk to you soon.
Thank you.
Thank you so much. Now, let's take a look at one of our founding sponsors, Marriott Hotels and Resorts.
Founded nearly 100 years ago, Marriott International's culture of putting people first goes back to our earliest days. Today, our development strategy remains firmly rooted in our values. Our commitment to owners and franchisees has never wavered, and together, we've grown globally. You benefit from market availability and development opportunities, while guests experience more choices from a diverse and innovative portfolio of brands. Our brands and product types offer you flexible options for any market. Whether new build, conversions, adaptive reuse, all-inclusive, or residential projects. From day one, you benefit from access to high-value guests through the world's most celebrated loyalty program and to Marriott's powerful sales and marketing engines that maximize hotel revenue from leisure, business, and group customer segments. Our unmatched global scale creates efficiencies and cost savings for you. And our ability to attract top talent, combined with our training programs, optimizes operations and drives industry-leading performance. From breaking ground to opening and operating your hotel, Marriott is with you every step of the way. By gaining more power today and driving more value tomorrow. Together, we will own the future.
All right, Good morning. I am sitting here with Tony Capriano.
Good morning.
President and CEO of Marriott International. This is your house.
It is.
We're in
Today
your
it's our house.
It's our house.
It's
Thank
our house
you.
today.
Thank you. We are so happy and thrilled to have the opportunity to be here, and more so that you took time out of your busy schedule to spend some time with us. You had a chance to see your alma mater,
My
right?
classmates,
so
that's
you're,
right.
You're a hotelie, is that right?
I am.
A hotelie?
That's exactly right.
I feel like an honorary hotelie. I had an
You might
opportunity.
be by the end of today.
Yeah, I had a chance to speak at the Dean's Distinguished Lecture Series. So saw you on the wall, and so I felt very privileged to be there. But thank you for attending here.
Thank you for being here.
Yeah, so I want to talk about Crown Hospitality.
Great.
Since you once were probably at that point when you were in the hotel management school.
I was never at that point
No?
as an undergrad. No, and I know all the presentations will be great, but the preparation and the poise and the confidence, as an alumni and a member of the Dean's Board there at Cornell, I was very proud of the team. I thought they did great.
Great. So what kind of feedback would you give them? They pitched a Town Place Suites in Houston. A little unique situation is, I don't know if you know anything, they're owned by the city. They said it was managed by the city. Any feedback that you would give them on their pitch presentation if you were sitting in the judge's chair?
I thought they picked an excellent family of brands.
Well,
maybe not surprisingly. But all kidding aside, I thought it was very wise for them to think about extended stay, given the way we saw extended stay products perform through the pandemic in the early days of the recovery. I think they're to be applauded for having done so much research. I think they talked about looking at 7 or 8 projects to find such a unique set of circumstances with such a low basis. I thought was quite interesting as well.
Right. So, I want to switch a little bit and talk about the environment we're in.
Okay.
I know a lot of people who are maybe watching or in the room may want to be hotel owners, and they're probably looking at Marriott International, Marriott's brands as a starter into the hotel space. But we keep hearing that there's challenges, right? And the environment we're in is tough. And I hear it's so hard, it's so hard. So in your perspective, you are the president and CEO of this major company that has over 8,600 hotels. So tell us your perspective and what you see for the future of the business, in the near future.
Sure. So I think number one, questions that people had about the resilience of travel have certainly been answered over the last 2 years. I mean, I think about 2.5 years ago, where many of the people in this room were questioning whether the pandemic was an existential threat to our businesses, to travel more broadly. You saw in the fourth quarter earnings calls, many of the big hospitality companies, record earnings, record fee volumes, and I think that is reflective not only of the strength of the respective management teams, the wisdom of their business models, but also it really underscores the resilience of travel. Prior to the pandemic, we already saw a shift among particularly younger consumers away from investment in hard goods towards investment in experiences. The pandemic acted as an accelerant to that shift, and I think now we're seeing that across multiple generations, and that's reflected in the performance of the business. Everyone in this room has willingly decided to pursue a career in an industry that is by its definition cyclical, and so we certainly can't pretend that the industry doesn't have ups and downs. For those that are considering investment, it's something we talk about on our team quite frequently. On one hand, on the fourth quarter earnings call, we spoke with great enthusiasm about record fee volumes, record EPS, but we have to remind ourselves, you mentioned we've got about 8,400 hotels. We own 20, any of which I'd be happy to sell you. So our business is a bit different than our owners and franchisees. And as a result, where we are in the relative recovery curve is quite different as well. And so RevPARs have largely, in most parts of the world, recovered to pre-pandemic levels and above. I wish I could tell you expenses froze during that 2.5-year period, but as you yourself know, that's not the case. And so the brand companies, the management companies, we've got to be very mindful of where our partners are in the recovery curve.
Right. And I always hear a little voice from Bill Marriott that says more, more, more.
Yeah.
And as a company, I know your growth is new developments, conversions, and with the capital markets being so constrained with the fact of trying to get a construction loan. I'm in the process myself. What are you guys doing, or how are you looking at the future and growth with that, I guess, the headwinds that we're having? Are they just headwinds, or?
Well, it won't shock you that I'm an optimist about the industry. A year ago, had we had this conversation, we would have been talking about uncertainty about the interest rate environment, uncertainty about where inflation was going, continued challenges with the supply chain, and uncertainty about construction costs, all representing impediments to new construction. Today, while all of those circumstances still exist, they are less and less top of mind for many of our partners. As you point out, the most significant impediment today is the ability to access debt. Less so for existing assets, which is part of the reason I think you see across the family of brand companies a higher and higher percentage of their growth coming through conversions. But for new construction, it continues to be challenging. The fact that you've seen the regional banks, which have been such active members of the financing community, pausing a bit in the face of SVB and some other questions about the relative health and future capital requirements for lenders in that tier. My expectation and my hope is that will be relatively temporary. There are deals getting financed. The deals that are getting financed tend to have two similar components of DNA. A demonstrated track record of performance by the project sponsor and an affiliation with a big global brand that offers access to powerful revenue engines and far-reaching loyalty programs. I think those two attributes will be ever more important in a period where there's some constriction in the debt markets.
Now, we'll be talking about this at the luncheon today. Leanie, your CFO, is going to be joining me for my Power and Numbers panel. But since you mentioned it, you talked about financing is it's getting done for those who are the seasoned sponsors. What advice would you give the women who are entering and not seasoned and their ability to access capital? What can we do to help them?
Yeah, I think partnerships help. I think it is tough, as you know, and we have talked about, the first deal is always the hardest one, right? And so the ability to align with a partner or an advisor who has that demonstrated track record, that they likely won't help you avoid all the landmines, but you can leverage their experience to avoid as many of those landmines as possible. I think engaging with the brand company, whether it's a franchise or a managed deal, leveraging their balance sheet, leveraging the strength of their lender relationships is critical. And I think leveraging platforms, in the case of Marriott, it is bridging the gap. I think other brand companies have similar programs, but using the resources that those brand companies are making available. As you point out, net unit growth is a critically important lever that drives the economics of the big global brand companies. As a result, they are making capital available for the right sorts of projects to drive that net unit growth, particularly in a window where the debt markets are constricted.
Great. Well, as a franchisee of Marriott, and
proud new operator, I think.
Oh, yeah, I'm an operator now.
I know
I'm operating my courtyard, so thank you. I appreciate you and your leadership.
Thank you.
And also your sponsorship of She Has a Deal and your embracing our vision to create more new pathways for women.
Well, and I might come right back to you and thank you for your leadership as setting aside my silly work stuff. I am the father of a daughter that's graduating from Cornell next month. And as I attended the reception last night and I look at some of the group photos you were taking, I was reminded what the future of the industry looks like. And it's very exciting and very promising. And you have a heavy hand in that. So thank you.
Thank you for being part of the future.
Of course. My pleasure.
Take care.
Thank you, Tracy and Tony. I see pens are down from our judges, and we are ready for Team 2. Chandler's core commitment. Chandler Williamson is from North Carolina Central University, and she is pitching a Hilton Garden Inn in the Raleigh-Durham area.
My name is Chandler Williamson, and I'm from the illustrious North Carolina Central University. I was inspired to start a career in hospitality after having the pleasure to travel doing sports, and after attending a NABHOOD conference, I realized that I'd love to pursue the hotel ownership and acquisition side. She Has a Deal has completely changed the trajectory of my career. It has allowed me to learn and gain a vast amount of knowledge that a lot of people don't have early on, and I'll be using that in the future. My goals is to stay in the hotel acquisition and ownership space, and also use my North Carolina broker's license to start learning how to do transactions and hopefully one day hotel transactions.
Please welcome Chandler Williamson. Woo!
Hello, everyone. My name is Chandler Williamson, founder of Chandler's Core Commitment, LLC. And here today, I have a uniquely positioned Hilton Garden Inn in the Durham-Raleigh Research Triangle Park. This Hilton Garden Inn features 177 keys and is in the upper mid-scale class. It is located in the country's largest research park called Research Triangle Park, or RTP for short. It is already cash flowing and will be purchased for $20 million. At a loan-to-value ratio of 65%, the equity needed to acquire this property is $7.8 million. Now, this equity will be flowing through the growing market of Raleigh-Durham and right into the leading brand. Hilton Garden Inn is the leading brand in the RTP market, according to CBRE's reports. Your equity will also be surrounded by diverse demand deriving from corporate, collegiate, and entertainment. Now, one of the best assets this hotel is going to get is a new strategic management company. Ideally, Concord Hospitality will come into this Hilton Garden Inn and operate it very efficiently. They are known as one of the top management companies. They have experience in the Durham market and the Raleigh market. They also have lots of experience with Hilton Garden Inn. Currently, they already have 6 to 8 Hilton Garden Inns in their portfolio that they're managing, and they're under development of one currently. This already strong real estate asset features a full-service restaurant and bar, newly upgraded business center, and also gym amenities. It also includes a pool and lounge for those who might want to take a load off. But the absolute best amenity this hotel has to offer is its airport shuttle service transportation. This shuttle transports guests only 7 minutes away to the Raleigh-Durham International Airport. This airport shuttle transportation is ideal for guests traveling into the RTP market, and we have it. Over the last 24 months, this hotel has been poured into with capital expenditures. If you focus your eyes to the top 2 pictures, you will see that the majority of this $2.7 million went to major guest room renovations and then also soft goods. Being able to acquire this property after its recent renovation and now being the newest renovated property on the block, our all-in costs are going to be $22.3 million, and price per key will equate to $126K. This is at significant discount to replacement costs of about 30%. Absolutely ideal for the industry that we're in now with rising construction costs and labor. So over a return on investment period of 5 years, the IRR will equate to an 18.38%, an equity multiple of a 2.17, and a cash-on-cash return of 11%. Now, this hotel is located right off of Interstate 40, as seen here as the star. Interstate 40 is the main transit route to get from Raleigh, which is North Carolina's capital, flowing into the RTP market, passing the Raleigh-Durham International Airport, and then going into downtown Durham before it starts seeing other major cities. Now, earlier I mentioned that your equity will be flowing through the growing market of Raleigh-Durham, and we already have new businesses in the area to prove it. Apple has just settled its first Southeast campus right here in the heart of the RTP area. This is over a $1 billion investment, bringing 3,000 jobs conveniently only 10 minutes away. Google has also recently settled in downtown Durham, featuring focusing on cloud computing, which is about 12 minutes away. Now, major brands in this market like IBM, Fidelity, Lenovo, ag bio companies, including the airport, take being in the largest research park very seriously. So when COVID-19 took its toll on the world, including this market, they decided to come together and form the Triangle Takeoff Coalition. This coalition's main focus is to maintain business within the RTP area and continue to grow it. We already have future growth coming from Meta, who has recently announced its decision to move into the market. Now, into other diverse demand generators, of course, the airport is the #1 demand generator. At only 7 minutes away, you can see it here positioned as #1. Last year alone, it was able to service 12 million passengers. Now, this is a 30% increase from the year prior, and the RDU airport is only going to continue to increase its enplanements. It is currently under an envisioned expansion plan, and in the next 2 years, it will widen its main runway by about 12,000 square feet. RDU is always continuing to add new airlines like Bahama Air and Iceland Air, new direct flights to Europe, and also more nonstop flights to major cities in the US like Miami. Now, if you migrate your eyes to the bottom right of the screen, you will see the PNC Arena and North Carolina State University. The PNC Arena is located about 10 minutes away and is also a major demand generator, as the PNC Arena is able to generate $14 million in hotel expenditures to the surrounding area. It's able to do this by being the second largest indoor arena in the state of North Carolina, with #1 nowhere in sight. It holds hundreds of events from major entertainment like concerts, sporting events, and also sometimes business conferences. North Carolina State University actually has its men's basketball team has its home here at the PNC Arena. It also is home to the North Carolina Hurricanes, which is a national hockey league. Both of these sports are able to hold their home games and their conference tournaments, which they have done before, right here at this arena. Now, if you shift your focus to the top of the screen, you will see Duke University. Between Duke University, State, and Chapel Hill, who is not on this map, they hold thousands of events per year, all willing to lodge between 15 and 20 minutes, which is in perfect radius of our Hilton Garden Inn. Sometimes they're willing to go even farther. Now, also in Durham, between 5 and 6, is the Durham Performing Arts Center, which is known as the DPAC. It is top in the country, and directly adjacent to it is the Durham Bulls Stadium, home to a minor league baseball team, both about 12 minutes away. Now, you might be wondering why I went all the way around instead of hitting #7, which is the closest to the demand generator. I did it on purpose because this is the new RTP hub. This hub is bringing office spaces like a skyrise laboratory. It's also bringing retail, food and beverage, and apartment complexes. It is RTP's now newest downtown Durham. It is only 5 minutes away, and it's perfect to keep our guests in the RTP area and not lose business going to downtown Durham. They'll be well entertained. I have been to this property. CBRE has done a great job of getting it complete. Phase 1 will be done by the fall of this year. Now, with all this diverse demand does come with a little bit of competition. We see major brands like Marriott, IHG, and Sonesta all within the comp set. The majority of these properties do sit directly off of the same interstate. They all compete for the same type of guest and have very comparable amenities, including food and beverage, meeting space, and the majority of them have airport shuttle transportation. Now, into the financials. RevPAR, RevPAR, RevPAR. Increasing RevPAR is the main focus of this acquisition. I would like you to notice how RevPAR has been increasing based on this table. You can see in 2020 to 2021, RevPAR was able to double. And then in 2021 to 2022, it was able to more than double. Now, it was not able to beat the comp set in 2022 because it did still have rooms down due to renovation. But you can see that this Hilton Garden Inn and the comp set is recovering from COVID. It is doing it a little bit slower, but full service properties have been recovering in this area slower, but now is the time to invest. You can see it's trending upwards and you'd want to get in quickly. So over the 5-year hold period, we have RevPAR still increasing based on the market demand and what is coming into the area. We have constantly already had a premium over the comp set in ADR. So Concord Hospitality will be focused on continuing to drive that up, coming off of its recent renovation and now being the newest repositioned asset on the block. You can see here in year 3 that we're able to regain index penetrations over the comp set as we were prior to COVID. Over the next 3 years, we will continue to maintain that ground. These projections are in line with where Hilton Garden Inn is on a national level from 2021 to 2022, ADR-wise and RevPAR-wise. CBRE also has its RevPAR projections in line with where you see this 5-year hold at. So, increased RevPAR then starts to increase revenues. You can see revenues starting at about a little bit under $6 million and working its way up to almost $8 million by the end of the hold period. Now, you might be wondering, are you sure you can hit these numbers? But I'm very confident. Hilton Garden Inn is known to do numbers like this, especially in bigger markets. Concord Hospitality is known for their operations. They have many accolades and awards proving so, and they will be working on keeping expense margins down. We did see a spike in expense margins during COVID-19 and the renovation, so they will be slowly working that down within year 3. So increase in revenue then trickles down and increases net operating income. You can see net operating income in year 1 starting at about $1.5 million and growing to about $2.5 by the end of the hold period. Now in year 3, that is going to be stabilization. We will see net operating income reaching peak pre-pandemic levels and then starting to exceed it in the next 2 years. And yes, I mean exceed it, because this Hilton Garden Inn is surrounded by demand. It is growing. We have a great management company, and Hilton Garden Inn is able to see these type of net operating income. So, with net operating income increasing, it will drive an exit cap rate of 9.5%. This is conservatively 1% over CoStar's projected cap rates for this market and into the 5-year hold period. This will result in a $27 million sales price and trickle down and result in a $12.6 million in net proceeds. This is how this Hilton Garden Inn will be able to have return on investments over a 5-year hold period of an IRR of an 18.38%, an equity multiple of a 2.17, and a cash-on-cash return of 11%. We're in the best market, an innovative market, a great brand under a great management company, and we are ready to invest now. I hope that you're excited. I want to thank you for your time. Again, my name is Chandler Williamson, founder of Chandler's Core Commitment, LLC.
You killed it. We're up here all by yourself. Oh, my goodness. That's amazing. That's amazing. Well, I was listening backstage and I heard kind of 2 key themes, at least from my perspective. Location, location, location. Yeah. RevPAR, RevPAR, RevPAR.
Yes.
So I'm very curious to hear what the judges have to think and have any questions for you. So Tara, I'll turn it over to you.
Sure. We're neighbors. So I live down the street from Central and up the street from this property. So
awesome.
I'm happy to know it pretty well. I'm happy to see it part of this competition. I think you did a great job, and I love your confidence.
Thank you.
One of the things I want to talk to you about or ask you about is the comp set. A couple of full-service hotels in there with a lot more rooms than what you have, potentially dragging down some of that set. I was curious if you were able to look at other more select service hotels, other Hilton Garden Inns or Courtyards or Marriotts in the area.
Yes, I did look at potentially doing the comp set, but the way the hotels are positioned in the market, they get closer to downtown Durham and closer to Raleigh, where Briar Creek is at, closer to that market. So it didn't make sense to quite reach out any farther. So keeping the comp set with where it's at was the best option. We do have those full service markets, those full service hotels in the upper upscale, but they are the Marriott is directly in front of us, and the DoubleTree is right across the bridge. So it does make sense to keep those in our comp set, as they are pretty big competitors of ours.
Yeah, I mean, your revenue projections, I thought you get back to 2019 revenues in year 3. I think that's pretty doable, maybe conservative. So I like that. And your NOI, you don't surpass your 2019 NOI until year 4, which again, probably some upside for you. So there's a ton of demand around you, and I think you're well positioned to capture that with your Hilton Garden Inn.
Thank you for the comment. Thank you.
Matthew, I see you look ready.
Yeah, your stage presence is off the charts. That was
Thank
great.
you.
That was awesome.
Thank you.
Just a couple questions. With that PIP, was there a new license or new?
Yes, Hilton Garden Inn is going to renew the license for this franchise agreement.
They give you another 15 years or so?
It's going to be 10.
Okay, 10. Okay.
Mhm.
Okay. And that might reflect more that 9.5 exit cap because you have a shorter maturity when you sell?
Yes.
Okay. That makes a lot of sense. And then my other thing, similar to Tara, felt like there's a lot of upside in the projections and you know, getting back to 2019 and year 25, 26, thought you might have some upside there. But overall, it was well done.
Thank you. Thank you so much.
Kara.
Great job.
Thank you.
I was wondering in the PIP, how did you get to the price per key that you assumed?
The price per key, it is just divided by the room amount. The PIP is $850K. That was confirmed by the broker and also Hilton that they confirmed that with for new ownership. So that's where I got that number from. You just divide it by the rooms.
And then as a follow-up to that, did you underwrite any disruption during that time period that you're doing the renovation work?
I wouldn't say any disruption, but we do have a FF&E reserve that's 4%, and it is hefty enough for this hotel.
John.
Yes, and it looks like in your pro forma for 2022, there were a number of rooms out of order going in from 2022 to 2023, and then you're outpacing the comp set. How do you believe the hotel is going to make that change during that time, from 2022 to outpace the comp set in RevPAR?
So all the rooms are back in order. It has been fully renovated. This projection, year 1, is actually going to be for 2024, because if you were able to close on this hotel, it would be towards the very end of the year. So you would just be looking at 2024. That means that ADR will probably already be around the 120 range, so you would be able to keep pushing that up within 2024 to get closer to the comp set with where they're at now.
And just a follow-up question. So the demand generators, what do you see your group mix? Where is your transient mix? And where would be your sort of affinity mix?
Okay, I'm really glad you asked that question, because I just checked the charts not too long ago. Group business has actually fully returned in this area. We get it from the PNC Arena. Obviously, downtown Durham has a lot of wedding events, and sporting events are very popular in this area. We have a lot of family reunions and people who just want to gather. We are still recovering from COVID, and people are really excited to do that. So that's where a lot of the transient business is coming from. People love Durham. The CVB has done a great job of really marketing it, and its growing aspects become a lot more safer, cleaner, and people are excited to be here.
Thank you.
Thank you.
Darian.
Great job, and
Thank
great to see that you've selected your management company already. So happy about that. Talk to us a little bit about the specific actions or levers that Concord has identified in terms of just improving those margins over the short term. And then as a follow-up, I noticed in the financial model, it looks like you did not incorporate any asset management fees. Talk to us about the strategy in terms of management.
Okay, I'll answer the latter first. The management fee is in there. It's 3%. I have not officially got Concord to evaluate this property. They do have their headquarters is in Raleigh, so I'm sure it would actually be possible. But I have noticed that there is inefficiencies with the structure of the employees. So we really want to make sure we get overtime down. I think that's what the spike was. Make sure that we keep implementing that. If you want housekeeping, it does have to be requested. You might want to just wait 3 days. We'll make sure that we keep like procurement products in there to make sure we keep taking down that expense revenue. But we have been considerate and added additional expenses for the sales and marketing, so we won't be just completely like getting rid of the team. We just really want to be smart with where they're at, so making sure the GM is good, sales and marketing, but not too much overtime with front desk and housekeeping. We can do a houseman to help strip rooms, get that time down in housekeeping, and if the assistant GM needs to, maybe they can step in and do some morning shifts if needed.
And I take it you're not using an additional third-party asset manager on top of Concord.
No, Concord is very well-rounded, and they are going to run it all. I fully have confidence in them. I've actually worked for them before. I've been in their revenue calls. I did get to meet the owners. They're so kind, and they do a great job. They take their business very seriously, and I loved working for them.
Excellent. Lastly, when does the Westin open?
The Westin is already open. I visited them right before I came. It opened, I think, in February, and so it's already in the market. So we'll see them go ahead and see what happens over this year, and then be able to adjust in the future. They're in a different market. They're by Briar Creek on the other side of the airport. They mostly compete with the Embassy Suites and that Hampton Inn that's right there. Yes, they do take airport guests, but you're looking at a different type of brand there, an upper upscale.
All right. Any more questions? All right. Woo, you handled it, girl. You did it. Woo-hoo! Thank you, Chandler. Oh my gosh, that was amazing. Great presentation. All right, audience, back to you. You've got 10 minutes to rate and comment. Scan the QR code. You know the drill at this point. This is for pitch number 2, to go in the app and rate the pitch. Now we're going to kick it back over to Genesis backstage and have her catch up with Chandler to see how she's feeling.
Thank you. Chandler, you did amazing and solo. You should be so proud of yourself.
Thank you. I definitely am.
Yeah, one of the major call-outs was, location, location, location.
Yes.
What's the process of even finding this gem?
Well, I live in North Carolina, and I go to school in Durham. This market is actually basically in the same area. I love where I live. I've seen the expansion, and I knew that there would probably be a good gym here, and I was lucky enough to find it.
Were you driving around looking for it?
No, I went on Hunter Hotels, and they had it, so perfect. You don't really know if it's for sale just by driving around.
I love it. Sounds good. Well, you did an amazing job. Congrats.
Thank you. Thank you so much.
And now a look at our sponsor, Hyatt.
Hello, I'm here with Emma Claire Spring. She is a SHAD alum, but most importantly, the winner of SHaDPitch 2021.
Correct. It's already been 2 years. It's crazy. Time flies.
I know. I'm so happy that you have been coming back year over year to support the women. And now we're sitting in your house because you are now the development manager for Marriott International?
Yes, specifically for the full service team, Eastern region. But yep, just started here in January. So definitely very full circle from pitching a Marriott hotel to now being on the development team here. So
yeah, so can you tell us how that came about?
Absolutely. So between the preliminary and the finals for my pitch, Lisa Sexton, who is now my boss, volunteered to kind of help me clean things up. We did a lot of work between the prelims and the finals. We actually changed the brand. I was originally going to pitch a 4 points, and she's like, don't do that, let's do a delta. And throughout that process, really just got to know her. We got to know each other. And then after the pitch, we really just stayed connected, saw her at Alice a couple times, and really just made an effort to stay in contact with her.
Yeah.
And she actually called me up this summer letting me know that they had a new position opening up on her team and that she would love for me to, apply for the role.
Yeah.
And so that's how that actually came about. Without that connection through She Has a Deal and working with Lisa, I don't think I would be here in this role today. So definitely very grateful for the opportunity.
I like to tell people, they say, well, what's the difference between early careerist and today's woman? And really with early careerists, it was about building the future pipeline of women hotel owners and developers. And we didn't necessarily intentionally say, hey, we're going to be a connector, a professional, career development platform. But essentially, that's what we were becoming, because as you come out of school, you're not necessarily ready to take on the responsibilities of owning a hotel or being qualified to own a hotel, but you have what it takes, what is required, and so that helps to set a pathway for you to get there. So are you still in pursuit? Are you interested in becoming a hotel owner?
Absolutely. I mean, every time I come to She Has a Deal, I find myself being super inspired. I'm like, all right, I need to get back into this and start searching for deals again, because, it's just truly amazing what these women are doing. I think right now I'm kind of focused on learning the business from the brand side, which I think will be super helpful for me in the future. It's really great being on this side because I'm exposed to so many different deals with different partners, different brands, ground-up development, conversions, and so I think just really taking the time to soak in all this information will definitely help me down the road, but definitely something that's still a goal of mine to own a hotel someday.
Yeah, so you get to see it from a different angle, and those connections are going to be critical, so make sure you...
Super critical,
you keep,
definitely.
Keeping that in your mind. So let's talk about the women, and we just saw the pitch from Chandler. Any advice that you would give Chandler, or actually, let's critique a little bit. Any critiques of her performance? What could she have done differently?
Oh my gosh. Well, she blew it out of the water, first of all. I have a lot of, connection with the solo pitchers because it is a ton of work to do on your own. And if you slip up, you don't have a partner there to kind of pick you up. And she just did an incredible job. I'm so proud of her. I think she was really thorough. She basically gave all the information that an investor would want to know, and not too much fluff. I think it was really focusing on the numbers. She did a great job of diving into the market, which I think when you are doing a straight acquisition, not doing a huge PIP or anything like that, that's really what you want to harp on is, okay, why are we investing in this specifically? What are the market demand drivers? And so I think she did an excellent job with that. She was conservative, so I think there's only room for upside there. Yeah. I honestly was trying to think of a critique. Her stage presence was great. She was smooth, confident. She did so good.
She nailed it.
Yeah.
Yeah, no, I was very proud to see her pitch. Yeah. And when I think about where the women start, and I remember working very closely with you.
Yes.
You come in and you told me yourself, you didn't know anything.
Literally nothing.
And in fact, you mentioned, well, I didn't know the numbers, and you were had a little fear or hesitancy in underwriting and the model. So tell us how you grew in that way.
Yeah, absolutely. It's so interesting because I went to school for hospitality management, and I think in most degree programs that really focuses on operations. Honestly, I hate to admit this, but most of college, I didn't even realize that the hotels weren't owned by the brands. I was clueless. So I came into She Has a Deal really not knowing a lot. And yeah, I think for a lot of the women, the financial modeling and the numbers are kind of the most daunting task, just because we're not really exposed to that. And so I think just leaning on the women from previous years, asking them where they got their numbers. Obviously, a huge shout out to all of the data partners, STR,
Absolutely.
Calibri. That's really valuable information. I think just playing around with the model, though, you just kind of have to do many different iterations, test out different deals, and then once you kind of repeat the process, you say, okay, I get this. It's making more sense. But like you always say, it's an art, not a science. That's so true. So I think you kind of just have to remember that it's never going to be perfect, and just keep going.
Well, I will say that you mastered it. When I saw you pitch, I was like, okay, she's a contender here, because I had seen your practice pitches, but I was so proud to see you go from not knowing anything to pitching like a pro. You were pitching like someone had been in the industry for years. So
well, thank you.
I appreciate you coming back. Keep coming back. Help us continue to support other women in this journey.
Absolutely. Thanks for all the work you're doing, Tracy.
You're welcome.
You're amazing. We're so grateful for you.
Thanks. Talk to you soon.
Yeah. Thank you, Tracy. All right. We are 2.5. We're on to 3. So let's meet number 3, AH Hospitality, Allison Bush and Hannah Takikawa from San Diego State University. They are pitching a Staybridge Suites in Austin, Texas.
Hi, my name is Hannah Takikawa. I'm from San Diego State University.
My name is Allison Bush. I'm from San Diego, California.
And we are AH Hospitality.
I was inspired to start this journey after going through my master's with San Diego State. After going through my master's program, I felt so empowered that there were so many other facets to the hospitality industry. I learned about She Has a Deal, and I knew I wanted to continue learning and seeing what else I was capable of.
Well, 2 of my close friends actually participated in the competition last year, and they told me a bunch of amazing things about the program itself. And I thought that would be a really good experience to go ahead and do and kind of open up new doors to future career paths.
This program has impacted me in so many great ways, but one of the best things it's given me is this amazing community of women. I think also all of the education and learning that we've been doing will allow me to really elevate my career and allow me to stand out when I go to make my next career step.
I've learned a bunch from the SHAD luminaries that have been able to come and speak to us, and then from the SHAD squad. I've also been able to connect and really network with all of the amazing ladies and people in the industry. I actually will be going into the Marriott Voyager Development Program after graduation with an emphasis in revenue management. I would love to be able to become a market revenue management leader in San Diego, the city I grew up in.
My career goals are to continue in hotel operations. Short term, I'm hoping to be a general manager within the next 5 years. And beyond that, I think I'd love to see where my knowledge and industry experience can take me, especially with everything that I've learned through my San Diego State Master's program and through She Has a Deal.
All right, give it up for Allison and Hannah.
Oh, hell nah. Well, good morning. We are AH Hospitality Group, and we are excited to share with you an investment opportunity in a city that Elon Musk calls the biggest boomtown America has seen in 50 years. Before we dive in, let's introduce the team. My name is Allison. I'm a 4th-year hospitality student at SDSU with an emphasis in hotel operations.
And my name is Hannah. I am an SDSU Hospitality and Tourism Management Master's graduate, and I'm currently an operations manager for the Residence Inn La Jolla in San Diego. Over the next 15 minutes, we will take you to the Lone Star State and walk you through our deal. We'll begin by going over our property details, then dive into an overall investment summary. We'll discuss the market, this property's historical and projected performance, and go over our financial analysis. We'll finish by reviewing your return on investment. So Allison, what are we buying? And more importantly, why this property?
Well, welcome to Travis County in Austin, Texas. This Staybridge Suites acquisition is a 79-key, 4-story property sitting on 2.7 acres of land. This hotel is in a prime location just off the freeway and in the most populated county in Austin. So why this property and why now? With proven historical performance, the backing of a power brand, and great cost margins, this is a stable investment in a strong market. Now, our vision for investors is simple. We want to take a good deal, make it better, and provide you with solid returns. With talks of an upcoming recession, this is one of the safest deals in the lodging market.
So now we'll go over our investment summary. With a purchase price of $13.5 million, estimated renovation cost of $2.7 million, an estimated closing cost of just under $904,000, we anticipate the total capital necessary to acquire this Staybridge Suites to be about $17.5 million. This total does include renovation management and contingency costs. The total cost per key comes to $220,912. We know that this renovation cost may seem high, but we feel this is a great value add for this asset to keep us competitive and to mitigate risk when new supply enters the market. This PIP estimate was shared with us by IHG directly and comes as a result of the recent design change for this brand. We'll discuss the renovation in more detail a little later. Because this investment comes with a more in-depth renovation than initially quoted, we feel that negotiating down the purchase price is feasible and fair. This purchase price includes this updated PIP cost and takes into account our calculated value for this asset. Today, we're asking our investors for $6.1 million in equity, yielding a healthy return of about $12.9 million.
After a typical 5-year holding period, your investment will yield a projected internal rate of return of 20%, a cash-on-cash return of 6.2%, and a multiple on invested capital of 2.4. With a renovation in year 2 and exit in year 5 at a 7% cap rate, we feel that this project is something that you guys probably want to invest in. As most of you know, Austin is a growing market and shows no signs of slowing down. Let's take a look at Travis County in South Austin, where this property is located, and see why it's at the heart of Austin's booming growth.
Known as the live music capital of the world, Austin is coming into its own right as a leading city for technology. More recently, Austin has been referred to as Silicon Hills, as countless companies and corporations continue to migrate from Silicon Valley in California to business-friendly Texas. In 2021 alone, 196 companies expanded operations or completely relocated to Austin, including Tesla, Apple, and Intel. As the largest county in Austin, Travis County is home to about 1.3 million people, which reflects a 26% population growth over the last decade. Compare this to the U.S.'s 7.4% growth rate and even Texas's 15.9% growth rate, and it's clear to see that Travis County is the place to be. This county also sees high visitor traffic, as it includes downtown Austin, the Austin-Bergstrom International Airport, the University of Texas, and notable company headquarters, including Tesla's Gigafactory.
Zooming in, you can see where our property is located in South Austin at the heart of all the action. From this map here, on the left-hand side, you can see where our property is located in relation to over 15 corporate headquarters and campuses. The outermost ring represents a 10-mile radius, which means that our property is mere minutes from Oracle, Intel, and AMD, to name a few of those campuses. Being in close proximity to the airport and surrounded by all of these corporate offices ensures that our property has a strong base of corporate business. To complement this, Travis County also has several leisure demand generators, as seen from this map on the right-hand side. Travis County, similar to our corporate demand, is mere minutes from popular destinations such as Zilker Park, the University of Texas, downtown Austin, and the hip South Congress neighborhood. Throughout the year, events like the South by Southwest Conference, various film and music festivals, and university sporting events bring in thousands of visitors and billions of dollars of revenue to our market. The Circuit of the Americas, located about 10 miles away, is also another premier venue that hosts high-volume events such as Formula One, for all my fans out there, go McLaren, and concerts as well. It is also set to open up as an amusement park in late 2024.
Our immediate comp set is made up of 5 hotels within a 2.5-mile radius, all within the upper mid-scale and upscale categories. Our property stands out within this group as the only all-suites IHG hotel and is one of the newest properties with the exception of the Town Place Suites, which was built in 2020. If you expand this radius, there are other extended stay hotels closer to the downtown and airport areas. Despite this, it is important to consider we are one of 2 extended stay IHG hotels in this market, with the other location about 29 miles away. This finding tells us that we have the ability to capitalize on IHG's marketing expertise and capture our IHG One loyalty members at our property. Our renovation is another reason why we'll stand out within this submarket. Once complete, we will be the newest upscale extended stay hotel in South Austin. Another reason we're really excited about this investment is the backing of a power brand like IHG. With one of the largest loyalty members in the world, our hotel comes with a customer base of over 100 million members. Combine this with Austin's extraordinary market and our hotel's established performance record, and you have yourself the perfect recipe for a cash flow investment deal. Although currently owned and managed by Mid-Continent Hospitality, we feel that TLT Solutions and Kanza Management would be the best owner-operators to help minimize costs, maximize revenues, and elevate this asset to its full potential.
We'd like to review the required PIP, as we do know a $2.7 million renovation on a 2017 property may raise some eyebrows because it raised ours. As most of you know, 2017 property may raise some. Although only being 6 years old, IHG has indicated that this property is due for an exciting renovation with the design change for the recent design change for this brand. Staybridge Suites Generation 7.0 will feature updates to the hotel facade, guest room interiors, and public spaces. This design change is indicative of IHG's commitment to their all-suites portfolio and will help us stand out within our market. So as you can see from the right-hand side, these are some pictures of the hotel that we are currently looking at. And then these are some pictures of the renovated design after their PIP. So we'd like to think of this renovation as a completely fresh start. All the benefits of breaking ground on a new project without the costs and delays of actually having to break new ground. This new renovation comes with, as you can see, a refreshed color palette, contemporary fixtures, and spaces designed for the modern traveler. This PIP is a great risk mitigation tactic as it will help our asset withstand new supply coming into the market. Now, let's take a look at the historical performance and the projected performance of our hotel.
In reviewing the historical performance for our property, it's clear to see that our market shows consistent profits and healthy growth. Our property has paced with the comp set on ADR while leading the pandemic recovery in occupancy. In 2022, our property ran an occupancy of 89% and an ADR of $138, which brought RevPAR to a record high of $123. Since this hotel opened, the comp set has been trending upwards for both occupancy and ADR, which shows the strength of the growing market. We'd like to review our performance during the pandemic. Although it does appear that this market has recovered, we feel that this will speak to the resilience of this asset to withstand economic downturns. In 2020, our property was able to maintain an occupancy of 66% and an ADR of $91, which is above both our comp set and national averages. The property where I currently run operations has very similar performance metrics in a comparable market in San Diego. Some might say that it's unreasonable to maintain the occupancy and ADR that we're seeing at this property, but with the right revenue management strategy and a sales-focused operations team, we feel that these numbers are achievable and sustainable.
With this in consideration, we believe we can enter the market with an ADR of $145 and a first-year occupancy index of 125%. These metrics are on par with how the property has been performing since the pandemic and align with market forecasts. For our first-year occupancy, we have taken into account the renovation year and the effect that this will have on our available room supply. We expect to see continued occupancy growth following the completion of the PIP, as we will essentially be marketed as a new hotel. Finally, we expect occupancy to stabilize in the high 80s, a metric we find achievable based on our available room, or the fact that we only have 79 rooms to sell and our historical performance. We strongly believe that an ADR-focused revenue management strategy will help us be successful in increasing our RevPAR and profits. We are optimistic about our ADR projections and have increased our sales and marketing expenses in that area to account for more innovative sales tactics to support this revenue strategy. Our projected ADRs are slightly above market projections, but we find this achievable based on the fact that we will be marketed as a new hotel and our historical performance.
You may have noticed that our projected performance does not seem to be impacted by new supply. This was intentional. From our market research, we did find there are a few brand competitors coming into the market. IHG is also set to open a few new hotels in the area, although these would not directly compete with us for guests because of their location and their chain scale. We feel that this asset is capable of withstanding these changes for two reasons. As Allison mentioned, with only 79 keys to sell each night, we feel that our small size will help to keep us resistant to supply changes. We also feel that our renovation will help us to compete when any new supply enters the market, since we'll also be like new. It's no doubt that new supply is going to enter Austin as it's such a booming market, but we feel that this particular asset is capable of withstanding these changes.
Now that we've talked about the asset and the market, let's talk about the money.
Here you'll see the structure for our capital stack with a 65 to 35 debt to equity ratio and $50,000 of sponsorship taken into consideration. You can see the necessary equity and debt highlighted here. As mentioned at the beginning of this presentation, we are asking our investors for $6.1 million and plan to pursue Silver Arch Capital's permanent loan to cover the remaining $11.3 million. Together, this debt and equity will cover the $17.5 million total cost of this project.
For our exit strategy, we have found it most wise to hold for a typical 5-year holding period. We have found the sale year to be best for our investors as it provides the quickest returns while maximizing profits. In year 5, our projected RevPAR is $158 with an expected net operating income of $1.7 million. Based on our historical performance, we believe that, just go. Okay, all right.
Like any investment, potential risks should be considered. The two biggest risks associated with this property are supply changes to the Austin market and the threat of a recession. It's no secret that the Austin market is growing and shows no signs of slowing down. It's inevitable that new supply is going to enter the market. We feel confident that Austin is capable of absorbing these supply changes and that our asset, as mentioned before, is going to be able to withstand these changes because of its small size and anticipated renovation. We also plan to pursue negotiating an area of protection agreement with IHG to prevent any new Staybridge suites from being built in our immediate vicinity. Extended stay investments have proven to weather economic downturns like the pandemic, so we feel that this investment is going to effectively funnel any invested capital despite talks of a possible recession. Why then this investment and not a new build or an alternative acquisition? We feel strongly that this investment opportunity is uniquely positioned for our target investors because it offers solid returns after a standard holding period and is a safe investment in today's turbulent economy.
Again, we'd like to review your projected return on investment. Investors can expect an internal rate of return of 20%, a cash-on-cash return of 6.2%, and a multiple on invested capital of 2.4. We underwrote several versions of this deal, but are confident that this one provides the most realistic returns.
Before we close, we'd like to thank the SHAD luminaries and partners who so graciously gave their time and resources to open doors for us. We'd also like to thank our coach Viviana, the SHAD squad, and SDSU for supporting us throughout this experience. And of course, we would not be here if it weren't for Tracy Prigmore. We're truly in awe of all that you've done for women in this industry, and we're so grateful for the opportunity to be here. Thank you all for your time this morning.
You did it! You did it. That was awesome. That was awesome. All right. You're done. You can breathe. Oh. All right. Well, you're kind of done. We had the judge competition.
Okay.
The question.
The hard
period.
part.
But the hard part, you know, you're good. You're good. So who would like to go first? Matthew, I'm looking right at you, so we're gonna do it.
Y'all did a great job.
Thank you.
Very fun. You know, it was a good presentation. I guess my question specifically to the stabilized occupancy at the high 80s, knowing Austin, there is supply coming to Austin. Did y'all run any sensitivity analysis, stabilizing at say 80%, what those returns might look like?
We did. We ran kind of a few best and worst case scenarios. Right now, even with our worst case scenario, so if we weren't able to negotiate down the purchase price, if our expenses were up, if our ADR and occupancy, we weren't able to reach those numbers. Even at that level, our IRR was at 14.5, cash on cash is 3.25, and our multiple on invested capital is 1.95. So lower, but not terrible. We also actually last night checked the deal room one more time, and they've updated their numbers, and they're projecting actually higher where they've been performing for 2023 so far. Their ADR was at 175.
And the occupancy was actually at 88%. And we actually hadn't been able to get that information since the
Until
deal
literally yesterday.
Literally yesterday, we couldn't add it into our pitch, but
so we feel good about where we feel like actually our projections might be a little on the conservative
because at first
side.
we were like, the judges are probably going to ask why the aggressive projections, which is I would ask the same thing. But then when we looked at that information, we were like, oh, for the last 3 months they've been going up and up. So
and you're right, it is a smaller asset, it is extended stay, like a lot of that can be achievable, but just knowing that it is more of an art and just stressing those numbers down when you get to 14 feels like good downside protection.
Yeah, exactly.
Thank you.
Darian?
Great job, great market.
Thank you.
Question for you around the financial model. So it looked like the franchise fees were hit 10% historically, and then they dropped to 5%, if I'm correct. Talk to us a little bit about what's driving that change. And then 2, talk to us a little bit about your competitive analysis around the 7% cap rate.
So the first part for the franchise agreement, we found when we received the P&Ls, it was a little bit different. We had to kind of go through it and hash out. They had been putting some into sales and marketing, so we kind of had to flush out what was actually going where. And then we did have a meeting with IHG directly, so we were able to kind of confirm that P&L compared to what the actual fees would be, that kind of lined up. So that's why that does look different in our projected analysis. And then the second question, cap rates. So we looked at a range. We're seeing 6 to 9%. So we kind of projected out to 7%. It's so dynamic right now, it's hard to say for sure one way or the other.
2028, I wish we had a projector that could tell us when it was, but we didn't have access to CoStar.
It's something in the, when we were running our sensitivity analysis, we did put the cap rate up a little bit. So even at that higher cap rate, that's the returns we were seeing. Yeah.
John?
First off, I would say go Mercedes. Let's go Lewis Hamilton.
Uh-oh. Well, shoot. I love Lewis Hamilton. Great driver.
That's fine.
McLaren's not even doing that well this year. Sorry, Hilton.
My question is for the renovation. So in speaking with IHG, was it mandatory for you to do that renovation upon purchase, or could you have delayed sort of the reno after that? And sort of, if you could, explain to me why you chose to incorporate the $2.7 million renovation.
You're right. Okay. So we had discussed potentially phasing that renovation out over time, but as part of our deal thesis that we discussed, we did want to kind of be that completely new product. Especially we have the Town Place Suites that's brand new. Austin being such a growing market, we wanted to have that competitive advantage. It is a newer property, but we felt that going all in right in year 2 and having that renovation all in one was going to help us with the 5-year holding period to be able to turn that around and market as a new product.
So originally the PIP that we received from CBRE was $1 million. We were like, oh, that's great, like let's do it. And then when we spoke with IHG, not a bad thing, we found it was $2.7 million. I'm like, should we change properties? Like that's a lot. But so basically when we were doing our underwriting, we found out that, you know, holding in a typical 5-year holding period would give us better returns kind of like all around versus if we were to extend that renovation over a couple years, that the returns wouldn't be as good holding on to it for a longer period of time. And then for our target investor, wants something in quickly, money in, money out. So that's why we decided to go with that.
Tara.
Good job, both of you.
Thank you.
I have a couple questions that hit on some of the questions that have been asked. And
Sure.
Renovation would be first. Really like that you included the renderings. Really helped visually understand how you're going to move EDR, you know, what you're saying in your projections. Does your renovation include that exterior redo, refresh?
Yes, it does.
Okay. And then on the exit assumptions and the cap rate, what were your sensitivities that you ran? You said you kind of ran some exit cap sensitivities.
So we ran it up to, we put it up to 8%, just because within the range that we've been seeing, 6 to 9%, we put it kind of right in the middle since ours that we have projected is on the lower side. So our sensitivity analysis that we ran, the projections that I shared, those were at the 8% cap rate.
Do you remember the returns?
It was 14.5 IRR, cash on cash was 3.25, and MOIC was 1.95.
It looked like a lot of your returns were back-ended on that exit. So just be cautious of that and your sensitivities. And then finally, on the RevPAR index, you know, the property was pretty much at 100% with CompSet prior to COVID, and now it's about 130, 135%, mostly driven by that occupancy that we talked about. Is there a reason for that? Do they have a long-term contract, or how durable is that?
So that was the issue that we ran into, unfortunately, when we were trying to communicate with the broker. He started responding for the first couple of emails, and then when we started asking more questions about, oh, could you explain to us why the occupancy?
It was one of our first
It was one of our first questions. Like, why is the occupancy doing so well for us and then not for the comp set? So that was kind of the one that we weren't really able to answer. And
I think seeing the numbers from last night that they are maintaining that high 80s occupancy, that we're thinking that it's some contract. We weren't able to confirm whether or not how sustainable that occupancy is going to be, but I think with this market,
for the last like 2 years, it's been sustaining that roughly. We even tried to call the hotel and they just hung up on us. So they're just like, yeah.
We tried everything we could because it was one of our first questions that we wanted to know if this was going to be a short term, or if it was something that was going to be long term.
Yeah. Especially with a sale asset, sometimes you'll see the properties put contract in there that you may not want long term, or you may. Digging into that.
Kara.
Good job, ladies.
Thank you.
I'm very impressed that you are memorizing all of your other options and sensitivity analysis. That's pretty amazing. I was struggling with questions, but I didn't hear you talk about the management company assumptions and who that might be.
So it's currently owned and managed by Mid-Continent Hospitality. So they're a management group from Texas. They do only extended stay hotels, but they don't manage any hotels that they don't own. So for our vision would be to have TLT Solutions come in and their management company. I personally like it when it's the same company and management, that the ownership and management, that they're on the same page, because I think it helps the operations to run a lot more efficiently.
And with our vision, we feel TLT would just absolutely maximize those profits and all those returns.
Any other questions?
No.
Well, kudos. I mentioned this was a year of preparation, but even down to the wire of last night, you were doing your research. So that's pretty amazing.
We're just like, let's look at it. And then I'm like, oh, it updated as of today. Like, we can't put in our thing, but we can sure explain it.
Well, kudos to your dedication and congratulations.
Thank you. Thank you.
All right. As we let these ladies get backstage, let's take a pause. You have 10 minutes to rate and vote and comment. QR code is right behind me. You know the drill. Please ensure that as you vote, you are providing commentary and constructive feedback. Okay, I'm going to kick it over to Genesis backstage to see how Allison and Hannah are feeling.
Amazing, thank you. You guys did an incredible job. You should be so proud of yourself. So I'm curious, what was the process like on preparing for this pitch?
So we actually it was a bumpy journey for us. We pitched the first time. We actually didn't quite make it the first time around, so we had to do a repitch. Allison happened to be traveling internationally at the time. So I had to do a solo repitch, but then we made it here and we did it together. So it's been a bumpy ride, but we're really excited to be here and excited we did it.
I'm happy it all worked out. Thank you. Congrats.
Thank you so much.
Thank you again.
And now let's hear from our sponsor, IHG.
Introducing IHG One Rewards, 18 hotel brands, 6,000 global destinations, one loyalty program that lets you guest how you guest.
Hello, I'm sitting here with Jenna Panagopoulos.
Yeah, very good.
Got that name right? You are the Director of Luxury, Lifestyle, and Hotel Development?
Yeah, premium development, but I focus on luxury. Yeah.
Okay, great. Well, thank you for being here.
Thanks for having me.
It's your first SHaD experience?
It's my first, and I'm really excited to be here, and I'll be coming back for sure.
Okay,
it's so
great.
inspiring.
Well, we're thrilled to have you. We are very grateful for IHG's continued partnership with She Has a Deal. It's really helping us, as you saw, transform the future. These women are our future hotel owners and developers, and we are on a mission to catapult them on that journey.
Right.
So we appreciate IHG. So what were your thoughts? I know you don't, your purview is not the select extended stay market, but I'm sure you're very familiar.
I am. Actually, I started my career back when I was at Michigan State. My level 1 internship was at a SHaDPitch Suites in Okemos, Michigan.
Okay, go green.
Go green, yeah. So this is very full circle for me. Extended stay is incredibly resilient, so I think it's a very wise choice. We saw how it performed through the pandemic, and the property is performing great, but with a pretty substantial renovation number in there, I think they'll get to their projections. So great investment.
Yeah. So what type of feedback would you give them or advice on the presentation so they can get better and better?
Yeah. Well, I think everybody's been saying this, but the capital markets are very confusing right now.
Yeah, confusing. I like that word.
Yeah, confusing because we really don't know, and it's something we're talking about every day with our owners at IHG, and more than ever in my career, we're trying to help owners find debt and navigate the kind of challenging times there. So I would just, keep revisiting that piece of the capital stack.
Now, are the capital markets different between extended stay and the luxury lifestyle market that you work in?
Yeah, probably. Just because of the magnitude, I think. But it's challenging all around. So we're facing the same issues.
So is it easier or more?
It's probably more challenging.
More challenging because of the price points are a lot larger. Can you tell us about some of the brands that IHG has on that luxury lifestyle space?
Yeah, sure. So starting at the top, our highest luxury brand is Six Senses. So we acquired that brand a couple of years ago. Regent, which came out of Singapore. It's a very exciting brand. We just secured our first Regent in the U.S. in Santa Monica. And then we've got Intercontinental, our legacy brand, which is my favorite because I grew up going to the Intercontinental in Athens. Again, my life is very full circle back at IHG. And then Vignette Collection, our new soft collection brand, Voco Hotel Indigo that have been around for a little bit now too.
So those are the brands that you cover in the development
I
space?
focus mostly on the Intercontinental and Regent stuff, but depending on the day, it all changes. So.
And when you said Athens, did you mean Athens?
Athens, Greece. Yeah, that's why that last name's fun to pronounce.
Right. I visited Greece this summer with my family. I did. I saw the Intercontinental.
Did you? Okay, but you didn't stay, so I gotta fix that next time.
Yeah, next time we'll have to look into Intercontinental. We're looking forward to identifying some Intercontinental properties to manage. So
great.
I'm going to manage theirs. Did you hear? I had to tell them I'm not involved in the judging. So, but no. So I want to go back to the women and their pitches and. Talk a little bit about your career trajectory.
Sure.
As we talk about this being building the future pipeline. Many of these women will go into positions that could lead them, on their journey to hotel ownership. What advice would you give them, given your experience, and you work with probably, see a lot of owners at different stages. What advice would you give them for that first job to get into, to get on the pathway to ownership?
Yeah, I think networking is probably the most important thing. Getting experience is great. Obviously we have to get an experience and an understanding. But networking and opening up those pathways is critical. I think in my career, I probably underestimated how important it was because I was so focused on learning. But coming to events like this and supporting the various organizations throughout the industry will really help them kind of meet the right people and hopefully see the path in front of them with people like you, for example. So.
Well, Jenna, thank you for joining us.
Of course,
I hope you enjoy the rest of the show. We have two more presentations.
Fantastic.
I'm going to turn it back to Jen to introduce our fourth team.
Wonderful. Thank you.
Thank you. And as someone with a very complicated Italian last name, I very much appreciate Tracy trying to untangle your name. All right, our next team is Spartan Stone with Sydney Young and Rachel Nicholson from Michigan State University. Team number 4 will be pitching a La Quinta Inn and Suites in Louisville, Texas. Let's meet them.
My name is Sydney Young, and I'm from Manhattan Beach, California, and I'm studying hospitality business at Michigan State University.
And my name is Rachel Nicholson, and I'm from Grand Rapids, Michigan, and study finance at Michigan State University.
And we are Spartan Stone. I've always known that I wanted to be involved in hospitality in one way or the other. I thought the operations was going to be for me, but then I discovered Tracy's program, and it really inspired me to get involved with hotel ownership. And it really showed me that this was possible for females, and it really made me want to join She Has a Deal.
And for me, it was almost a complete opposite situation. Being a finance major, I wasn't always initially drawn to hotels, but the She Has a Deal program has really opened my eyes to what a career in hotels could look like, and I'm super excited about it. This program has positively impacted both of us. For me personally, it has allowed me to know the tools to be successful in the hotel industry.
I think this program has really improved my confidence. I know going forward for future internships and even in my coursework, I'm a lot more confident in what it takes to really own a hotel and develop a hotel. In the future, I really hope to work at a real estate investment trust or a private equity firm that specializes in the hospitality asset class.
And for me, I really want to work at a real estate private equity firm, working on their acquisitions team. And then I also, in the next 15 years, want to open up my own coffee shop.
All right, give it up for team number 4, Sydney and Rachel.
Hello everyone, thank you all for being here today. We're honored to be presenting with She Has a Deal this year. We're Spartan Stone from Michigan State University, and today we're going to talk about our vision for the transformation of the La Quinta Inn and Suites in Louisville, Texas. I'm Sydney Young. I'm a junior in the School of Hospitality Business, and I'm from Manhattan Beach, California. When I'm not practicing for She Has a Deal or studying, I teach indoor cycling classes.
And I'm Rachel Nicholson, the second half of Spartan Stone. I'm a junior finance major from Michigan State University, minoring in Spanish and real estate, and something I want to achieve is owning my own coffee shop. So jumping into today's agenda, we'll be going over 6 main topics today. The first, proposal and summary of the La Quinta Inn and Suites. Second, the market analysis of Louisville, Texas. Third, the demand generators for our hotel. Fourth, why we chose to stick with the La Quinta brand and add Concord Hospitality as the management company. Fifth, we'll dive into the financials, and then finally take time to answer any and all questions that you may have.
Here's our property. It's a La Quinta Inn and Suites located in Louisville, Texas. Louisville is a submarket of Dallas, and it's about 30 minutes north of Dallas. Our property consists of 129 keys, an on-site bar, a fitness center, and an indoor pool. The chain scale of our property is an upper mid-scale hotel. Here are some photos of our property, and it's a really great property for a La Quinta Inn and Suites. I know I would really love to stay here. It was constructed in 2020, so relatively new property, newest in our competitive set. It includes an oversized fitness center and a cozy and inviting lobby.
Moving on to the investment summary, we decided to target a purchase price for this hotel at $14 million, which is about $108,000 per key. After adding renovation and closing costs, that brings our total capital investment to $15.6 million, which is about $121,000 per key. We plan to hold this hotel for 5 years, which will give us a levered internal rate of return of 24%, a 12% cash-on-cash return, and a 2.66x multiple on invested capital. Now we're going to move on to the market analysis. So first, Louisville. Louisville's population is growing rapidly. From 2000 to 2027, it's projected to grow steadily. Within a 1-mile radius of our hotel, it's projected to grow 19%. Within a 3-mile radius, it's projected to grow 18%. Louisville is a great market. Additionally, we wanted to point out that Louisville is outperforming Dallas. First, on the right hand of the slide, you'll see that occupancy in the hospitality space is higher in Louisville than Dallas at 69%. And then on the office asset class, it has a lower vacancy rate at about 17%. Additionally, we wanted to highlight that there's incentives to the Texas market overall, has no state income tax and lower property tax. Texas is a great market. Additionally, we wanted to point out that the Dallas-Fort Worth Airport is a huge demand generator for us. It's only 8 miles away from our hotel with 193 domestic destinations and 67 international destinations with almost 170 gates. The graph shows the amount of passengers coming into the airport every year, and since the pandemic, it's grown rapidly back to the pre-pandemic levels. Additionally, we wanted to point out the world rankings. It's third in terms of operations, second in terms of number of passengers, and the first carbon-neutral airport in North America, and the largest in the world.
I next wanted to point out our location and proximity to the 2 highways. So we're right off the 35, which makes us highly visible and easily accessible. Now I'm going to talk about a few demand generators. So why Louisville, Texas, you might ask yourself? Louisville was one of the main reasons that Rachel and I decided to go with this property. If you look up the top right corner, you can see the airports that Rachel just talked about. We also have outdoor attractions such as golf courses and the Louisville Lake, which is a popular spring break destination. We also have medical centers, amusement parks, and we're very centrally located. So here's a map of some of the attractions that I was mentioning. We have all the amusement parks, but if you look at the very top, there's a Universal Studios concept that's being developed in Frisco, Texas right now, and we expect that that will be a great way to drive up our average daily rate. If you look at markets like Orlando or Los Angeles, they're able to capitalize on the Universal Studios, and we plan to do the same. So our target market is family focused due to the nature of the attractions that we have in our market. And we plan to accommodate that with 2 beds, a sleeper sofa. I know my family would love to stay at this La Quinta Inn and Suites. And because we're so close to the airport, we also plan on having some leisure travelers and transient travelers as well.
Additionally, we wanted to point out that there's some surrounding corporate business in the area. 2 headquarters in particular, the first being PGA's headquarters, which recently opened in August of 2022, which is valued at $33.5 million, is just a few miles away from our hotel. Additionally, Mary Kay's headquarters, which is valued at $100 million, is only 13 miles away from our hotel. There has been significant business migration to Texas because of all the great tax incentives for companies. One company in particular, McKesson Corporation's headquarters, moved from California to Texas in 2018. It's only 12 miles away from our hotel. This is showing that many companies will be moving their headquarters to Texas. Now we're going to move on to the brand and management company. So first, why Wyndham? Wyndham has 9,000 hotels across 22 brands in 80-plus countries. It's practical, reasonable, yet still widely known. It has a strong reward system, and that's partially due to their award-winning app. Wyndham is growing rapidly, and we want to grow with it. Additionally, why stick with the La Quinta Inn & Suites brand? That's because that free daily breakfast, signature pillow top mattresses, and contemporary rooms. Additionally, we wanted to point out that the La Quinta brand was founded in Texas. Texans love the La Quinta brand. Next, for the management company, the hotel is currently managed by the owner, and we think that adding a management company will significantly increase revenues, and we decided to go with Concord Hospitality. The first reason being their core values of quality, integrity, growing profitability, and having fun. We stand by these core values and want to work with the company that does. Additionally, their experience in the market. They have 148 market-leading hotels across 27 renowned brands. Zooming specifically on Texas, they manage 10 hotels with 2 in the pipeline. They offer many services, not all listed on this slide, but one we wanted to highlight in particular is the menu and beverage program. Like Cindy mentioned, there's a bar on site, and we think that adding the service that Concord has will significantly increase revenues. Additionally, their environmental impact. They're focusing on ways to reduce their water consumption through a linen reuse program, lower flush systems, and we'd like to implement this in our hotel. We talked with Concord's market feasibility team, and they love this hotel and want to work with us.
Now I'm going to dive into the competitive set and hotels in the pipeline. Here's our competitive set, and I did want to mention that 2 of these properties are mid-scale properties, so when we dive into the financials, just try to keep that in mind. Also, there's only 1 other hotel that has a bar on site. We all know that alcohol drives revenue, so that we have the competitive advantage in that sense. Also, these properties were not renovated or built within the last 20 years, so we are one of the newest properties within our we are the newest property, I should say, in our competitive set. Now, these are our hotels in the pipeline. It might look a little bit concerning at first, but I want to remind you that we have a 5-year hold. So by the time that we exit, these hotels will just be entering the market and they will not be performing at their highest capacity that they could be. Also, 2 of these properties are being constructed, but the rest are only in final planning. So as the supply chain's going right now, we think that that could be delayed and we will have the advantage within our market.
Now we're going to move on to the financial portion of the presentation. So first, historical data. Like Cindy mentioned, this hotel was built in 2020, so we only have full year data for 2021 and 2022. So first, looking at the occupancy line, in 2021, it had a lower occupancy rate at 61.1%. But in 2022, it exceeded the market at 72.5%. For the second line of ADR in 2021, it exceeded the market at $82.61, but lagged in 2022. For RevPAR, in both years of operations, it has been below the market. But again, we wanted to point out that this hotel has not been open for a full 3 years and is continuing to ramp up, and it opened during the pandemic.
When it comes to projected performance, in 2024, we increased our ADR by 7.5%. And that's because we're confident in Concord's abilities to help us in terms of sales and marketing so we can rev up our ADR. Additionally, we looked at the STAR report, and on the weekends, we're currently overperforming the market in terms of occupancy, but underperforming during the weekdays. Also, when we looked at the STAR report, we saw that we were consistently underperforming the market in terms of ADR. So we're confident that Concord will be able to help us with those issues. And then moving on to 2025 and beyond, we have that increasing by 3% to account for inflation, which is the industry standard. Now for financing assumptions, we went with Huntington Bank, and here's what they offered. 25-year amortization, 12 months interest-only period, 50% loan-to-value of $15.6 million. And when it came for the interest rate, they gave us an 8.55% interest rate, and we derived that from the secured overnight financing rate plus 400 basis points. So that's how we got that number.
Moving on to the capital stack. So as sponsors, Cindy and I bring $50,000 in equity to the deal, with our equity partners bringing the remaining $7.7 million. Then, like Cindy mentioned, we have a 50% loan to value, which brings our third-party financing to $7.8 million, which brings our total sources to $15.6 million that we mentioned earlier. For the uses for that money, we again plan to target a purchase price of $14 million and having a property improvement plan of about $5,000 per key. Because this hotel was built in 2020, we don't see many renovations needing to be done at this time. After adding closing costs, that brings our total project cost to $15.6 million, which is about $121,000 per key.
Now, just to sum up some of these financials for you, in year 5, we expect our occupancy to hit 77%, our ADR to hit that $125 number that you see, and the RevPAR to hit around $97. And if you direct your attention to the graph on the very right, you can see our penetration indexes. They all exceed 100%, making us a competitor within our market. Lastly, we decided to conduct a return on investment sensitivity analysis. If you look at the middle, I want you to focus on that 24.26% number because that's what we put in our financial model. And that's assuming a $14 million purchase price and an 8% exit cap rate, which is also the industry and market standard. And then if you look at the 12.05% and the 36.04%, those are our worst and best case scenarios. So we've really done all the numbers and the due diligence, and we're confident with the numbers that we're bringing.
We as Spartan Stones think that the La Quinta Inn & Suites in Lewisville, Texas is a positive investment and complementary to the TLT Solutions portfolio. It's low risk, located in a thriving market of Lewisville, Texas. Additionally, we wanted to point out that Texas is in the top 5 fastest growing states in the U.S., so now is a great time to invest in the Texas market. And with that, that concludes our presentation. At this time, we can answer any and all questions that you may have.
Congratulations. Nicely done, ladies. Nicely done. Nicely done. All right, are you ready for some questions?
Let's do it.
You seem like you're ready. All right, let's get to it. Darian.
Sure. Great job, ladies. I was actually in Frisco this week. My brother lives out that way. And so a ton of growth, which is a great opportunity there. Talk to us a little bit about the financing, because the 50% just jumps off the page in terms of why we're not able to get higher than that. And I'm curious in terms of what discussions you've had with other lenders, and potentially from a sensitivity perspective, what does it do to your returns if you were able to get, let's say, 60% loan?
Yeah, so we talked to 2 banks, and one of them even offered us a 45% LTV, and so this was higher for us. And I think it's just due to the market and where interest rates are at. They weren't willing to give us a higher loan to value at this time, but we think that there's definitely a chance to, if we talked with someone else, we could definitely get a higher loan to value.
Also, to jump off of that, the financials that we were given from the broker, the person who's currently managing our property, the financial statements weren't necessarily up to his standards. It looks like he does it on QuickBooks or something. So they were concerned in that sense. But we have talked to other people, and they also agree that we could get a higher loan to value, and that would increase our internal rate of return.
Kara?
That was my question.
All right, no, on the spot. No, all good. John, that was your question too?
Another question that I have, just around the PIP costs. It seemed a little light. I mean, typically, even with a change of ownership, there is some component of a PIP. I guess, how deep did you get into that research?
We talked with the broker specifically, and he said that he didn't see any renovations really needing to be done, so we went with $5,000 per key, conservatively, in our opinion.
It was constructed in 2020, so relatively new, and we think maybe in a few years that there will be more renovations needed, but at the time, the reviews on TripAdvisor say that the hotel is great quality, up to par,
the only
very
problem
nice.
is the management, is what TripAdvisor said. And additionally, we have a 10% contingency, so if something were to happen, we could use that.
Yeah.
I like the fact that you did the office rate occupancy coming in. That's pretty important in the environment that we are in now. But with the addition of the competition that is coming in, do you believe your higher occupancy, your rate was higher or a little bit lower than you think, depending upon your exit strategy, or if they're able to build several of those hotels a little quicker than you're assuming on your 5-year exit cap?
You want to go?
We think that with the way that construction costs are at currently, we think that people will be stretching out their construction costs, and so we're confident that most of them will be later in 2025, and then when they ramp up to that 3-year stabilization, we'll be exiting in 2028. So we're confident.
Tara.
Good job, both of you. You answered a lot of our questions in the presentation and with Damien's question, or Darian's question, sorry. The one thing I wanted to talk about was the expenses, and if Concord has dug in on those. It looked like revenues had grown in 2022 versus 2021, but NOI had stalled out or maybe even gone down.
Yeah.
And you guys are going to be stepping into an environment where operating expenses are rising, and what have been your conversations with Concord about that?
So we've done we've had extensive conversations with Concord and their feasibility team and specifically. Also, they have a team out in Texas, so they're really familiar with the market. And they've also noticed that with the NOI decreasing, and they have plans to flip that around. We just think it's not in the right hands right now, being that it's managed by one single owner.
Yeah, Concord looked through our model and was very confident in where our numbers are at.
Matt.
On the revenue side, and you know, Louisville, Dallas, everything's growing. It's great. The growth assumptions for the market look pretty aggressive, and then y'all are growing to 100% index. Do y'all have any updated financials through 2023, just proven strategy?
We did not get any 2023 financials from the broker.
But that's something that we could look through going forward. The projections that we got about the market increasing was from trusted sources
and CoStar reports based on the Louisville market.
It was a great presentation, by the way. But that was just one question. In the types that I saw, Mary Kay, PGA. What are the types of jobs in Louisville? Is it more back office or?
It's a lot of back office. There's also a few medical centers, so there's a lot of medical occupations as well, and then some blue collar jobs as well.
Okay, perfect.
And then also with the Universal Studios concept, that will offer a lot of jobs as well once that opens in the coming year.
Okay, thank you.
Getting a good geography lesson through all these presentations. Any other questions? All right, ladies, congratulations. You did a wonderful job. I'm going to let you go back and hang out with Genesis while we get voting underway. All right, now it's up to you, audience. Here with me or online, tell us what you think of Team Spartan Stone. You have 10 minutes to rate and comment. I'll get out of the way so that you can scan this QR code. And this is for pitch number 4. All right, let's see how the ladies are feeling backstage. Genesis?
Thank you. You guys did an incredible job. How do you feel?
Awesome.
Awesome. Good. We're happy with how we pitched.
Yeah, we're
excited. I heard you guys did amazing. Good job.
Thank you.
I wanted to know, so what's the story? How did you guys partner up? Are you guys best friends?
No, not at all.
We're best friends.
Well, we didn't know each other before this competition, is what I'm trying to say.
Yeah.
And we come from completely different backgrounds, different majors, but it was the most complimentary. I couldn't have done it with anyone else.
Yeah, what's your majors?
I'm finance.
I'm hospitality business, and what we like to say, it was kind of like a blind date from our professor. He just
put us together.
And it worked.
Perfect mix.
I love that. That's amazing. What has been like your biggest takeaway about doing this process with Shad?
Time management, definitely. We both have hectic schedules, so coordinating that has been a challenge.
And just growing our confidence throughout this program definitely helped as well.
Awesome. Well, amazing job, ladies. You did an incredible job. I'll see you guys backstage.
Thank you.
Oh, okay, wait, sorry, one more question. How has Shad, all of the different mentors, any mentor you want to shout out that you really had to go? Yeah, go ahead.
We would like to shout out Paulina Shavrina from Concord Hospitality for helping us out.
She's an MSU grad, go green.
Go She's awesome, and she's helped us a lot, so we're really grateful.
Additionally, Professor Hadlock helped us as well. We're very grateful for hers too.
Awesome. Okay, we have more time.
Awesome.
So I'm just going to ask you more questions.
Perfect.
So what sparked your interest in getting into hospitality, in the hospitality space?
I've always known I love this industry, love to travel, love hotels, but Rachel, she has a different experience.
I'm a bit opposite. Being a finance major, I wasn't initially drawn to the hospitality industry, but we have a great real estate minor program at Michigan State, and I was exposed to the hospitality industry through that.
Gotcha. That's awesome. All right. Well, thank you guys, ladies. I'll talk to you guys soon. Oh no, you guys are just so special today. Even more questions. What's your favorite color? I'm just kidding. So being in hospitality, where do you see in the future? What's the next steps?
Want to go first? Go, girl.
I think working for a real estate private equity firm is what I'm most interested in doing. On the equity side, acquisitions, asset management is what I like the most.
And I'm interested in asset management, but I'm a hotel girl, strictly hotels, hopefully. That's my favorite asset class, and I wouldn't see myself in any other industry besides hospitality.
Yeah, and with all of the brands out there, what has been your favorite brands?
Obviously, the La Quinta Inn
and Suite. Yeah, the La Quinta Inn and
Suites by Wyndham.
Yeah,
we love them.
We love Wyndham.
They've been great to work with.
Yes, I like them too. All right, cool. All right, before we jump into our next Shad Talk, let's hear from one of our sponsors, your favorite as well, the Wyndham.
The story starts with my mother, who had a business when women didn't have a business. And I can remember going to the bank with her while she tried to get loans. And it was very hard for her.
Being told that my terms and my financial package is the best I'm going to get, but my husband's able to get different terms.
I have banks asking me, oh yeah, I like this project. Can I speak to your husband? Can I speak to your father? The daily struggle is still there as a woman, even in 2022.
Women in the Room is probably one of the most important things that we could do as an organization or as a company. We've seen a gap in the creation of ownership or even wealth amongst women owners.
And so what our team has done is put together a program that will help women figure out the how and why to get the project into the ground, and then also how to operate the project once it opens.
I was so impressed by Wyndham and how present they were. I felt very supported.
Woman on the Room program is giving you all these tools to educate yourself.
I felt like that brand's already ahead of the curve because they're already listening.
What we're saying is, you go do it. We're going to be there clearing a path for you every step of the way. And that's what Wyndham is here to do, clear that path.
I have worked with other brands before, and I hear lots of no's. And when I go to Wyndham, everything is yes. It's a true partnership.
To be able to have my own properties, to be my own owner, programs like Women Own the Room, they make it possible.
All right, my Shad Talk is with the audience on this segment. Who wants to have a chat with me? Come on, somebody. Oh, we have someone back here. I want you to stand up and tell me your name and where you're from. Okay. I can't take my mic.
I wanted to really get into it. Yeah, you got it. I'm Jennifer Hill. I am with Calibre Labs, and I wanted to just share a quick story that seemed to hit home with a couple of people yesterday, which is that we are so proud to sponsor this and to support the program. But when the first report comes in, we celebrate it as a company, and when the last report goes out during the pitch competition, we celebrate it as a company. And hopefully some of my colleagues are watching on the live stream, but nonetheless, everyone at Calibre Labs thinks what you're doing and what everyone here is doing is just phenomenal.
Thank you, Jennifer. Jennifer helps the women identify their comp sets and understand and interpret all the data. We want to say and give a shout out to Cindy.
Yeah, absolutely.
Yes. Thank you, guys. Invest in women, pay women, hire women.
Yeah,
that's
Kelsey
wonderful.
Trainer.
Thank you. All right. I see a good friend, Angel Johnson. Why don't you stand up?
Yes. Hi, everybody. I'm Angel Johnson, and I love all of this women right here. I actually used to work for Marriott, so I worked here for 6 years in technology, and it was Julius Robinson that came to me and said that I could possibly be an investor owner, and so I took Tracy's masterclass, and I was able to invest in my first hotel deal last year. Shout out to Kendra. And it was a Hilton property, so I definitely am just grateful for Tracy, her guidance, her leadership, and her expertise. So, love you.
I didn't plan her. I'm losing my voice. I see some Shad alum in the back. Miss Emily Johnson, all the way from New Jersey. Stand up, Emily. How's it going today?
I should have known when I stepped in the room that you would come for me. Excited to be here. This is phenomenal. Me and Tracy were talking. We're going to start up the Shad alumni group right after this. So making sure that we all stay connected, that we all invest in each other, we all help each other, and continue to grow as a group. So excited to be here again.
What do you have? What advice do you have? What advice do you have for the ladies?
Be confident. We all can do it. They know their stuff. I've been watching the ladies. They all know exactly what they're doing. And so I'm just proud of what the future holds for this group.
Thank you, Emily. Have some more time. I want to talk to someone else. Who else wants to talk to me? give me some input? Oh, great. Stand up. Tell us your name and where you're from.
I'm Ann Sesso. I am actually from Maryland. I used to work right next door for a CPA firm. I brought a team. This is our first year, and we're just so excited, Tracy. This is incredible, so needed in the industry. We look at financials, so I love they know their numbers, and that's critical because you want to make some money doing this, and thank you.
Thank you. Okay, somebody else. Everyone, are you hiding? I see. Anybody want to talk to me? I'm going to come talk to you if you don't come talk to me. Okay, here we go.
I'm Melissa. I'm a district manager with Extended Stay America, and this is our first year sponsoring with Tracy, and it's absolutely fabulous. I am so happy to be here and see all these fabulous women. And as a district manager in the hospitality business, everything you guys are speaking about is what we face every day. So, I mean, this is just awesome, and I hope to be with it for many more years.
Thank you for coming. You want to give a shout out to Greg?
Oh, Greg and Greg is one of the best CEOs. We were just with him last week, and he just has the greatest personality. I just couldn't be happier with where I work.
Great. Well, thank you, Extended Stay America. Thank you, Greg, for your sponsorship. I want to talk to one more person before we get ready for the fifth pitch. Oh, come on over here. Okay, we have one of our SHAD alum.
Yes. Hi, my name is Braylon. I participated last year in early Careerists. I'll just say I grew up in Vegas, always wanted to own hotels. Didn't know how. Tracy Prigmore showed us all how. So thankful for her, for the network that this opportunity has created, for everybody that I've pitched with. And I'll just keep coming back as an alumni, and just so thankful to have gotten opportunities after this as well. So SHAD is amazing.
Thank you, Braylon. Braylon has been working on our judges. It was yesterday you did the judging, right?
Yeah, and today.
And today. Oh, okay. Yeah. What are you doing in here? You're adding up the scores. Thank you, Braylon. Braylon, so all of our alum, many of them have come back, and they are helping us. So we have a larger SHAD squad, and it takes a village to do this. So we thank all of our volunteers today, and we'll get ready for our final pitch, which is... Who's our final pitch? Does anybody know? I know. McKenna Price is pitching a Marriott Fairfield Inn in Tamarack, Florida, which is northwest Fort Lauderdale. Jen?
Thanks, Tracy. Oh my gosh. Last but not least, right? We made it through to number 5. As Tracy mentioned, McKenna Price, she is with, I don't want to butcher this, Hukipa Hospitality. She is from Washington State University and will be pitching a Fairfield Inn and Suites diagonally across the country from Washington in Fort Lauderdale, Florida. So let's find out a little bit about McKenna before we hear her pitch.
My name is McKenna Price. I'm a recent Washington State University graduate. I am born and raised in Seattle, Washington. Hospitality is something that is deeply rooted within my family. I like to joke and say it all started with the pineapple, but it started when my great-grandfather migrated from the Philippines to Hawaii to work in the Dole Pineapple Plantation. It gave my family endless opportunities, and my ultimate goal is to spread the spirit of Ho'okipa and allow others to experience it. Is not just to own hotels, but provide the best hospitality out there. And what better way to do that than by immersing guests in a culture that embraces hospitality as a way of life? This program has impacted me tremendously. I never even thought something like this existed. It's been amazing to meet mentors and peers and people who just share a love for hospitality like me.
Awesome. Let's welcome McKenna.
Aloha! My name is McKenna Price, and I'm a recent graduate from the Washington State University School of Hospitality Business Management and the founder of Ho'okipa Hospitality LLC, a hospitality investment company. My great-grandfather migrated from the Philippines to Hawaii to work at the Dole Pineapple Plantation. The sun radiated his leather skin, and the red dirt stained his hands. To many, the pineapple is the symbol of hospitality, but to my family, the pineapple provided an opportunity. Ho'okipa is a way of life. Ho'okipa, in Native Hawaiian,
is hospitality that expects nothing in return and aims to make guests feel welcomed. It has been passed down through generations in my family, and I can't wait to share it with you. So are you ready to invest in a smart and attractive deal and spread the love of Ho'okipa hospitality? First, I'll start by introducing the brand and management and share an overview of the market. Then I'll provide market projections and discuss potential risks and my exit strategy. Let's begin. Today, I am here to ask you to invest $8.1 million in the Fairfield Inn & Suites by Marriott in sunny Tamarack, Florida, a project that is currently under development by 81 Global and will be finished in June 2023. The hotel is 120 rooms and will be the newest select service branded hotel built in the area since 2009. The hotel is surrounded by a multitude of diverse demand generators, including the neighboring Colony West Golf Club and Championship Course, making it the perfect destination for a wide variety of travelers. Construction began in late 2019, and as of today, the building is 95% complete and will be finished in June. Once construction is finished, I will close the deal when the hotel receives the certificate of occupancy. The hotel is scheduled to open its doors in August, making the grand unveiling just 4 months away. This 5-story building offers 120 well-designed rooms with flexible workspaces, complimentary hot breakfast, free Wi-Fi, and a calming ambiance to help guests relax. Shown in the picture, you can see how close the golf course and clubhouse is relative to the hotel. Now, to make sure I wasn't buying a hotel that would be target practice for golfers, I decided to travel to Tamarack, Florida, all the way across the country, and check it out for myself. Thankfully, it's not. Construction is going great, and everything is coming along perfectly. Now, for the part you're really here for, let's dive into the financial details of this investment opportunity. The total acquisition cost is $22 million, or $183,300 per key. The closing and financing costs are about $1.2 million, bringing the total project cost to $23 million, or $193,300 per key. Of the $23 million, I am asking for $8.1 million in the form of equity. Based on my analysis, I anticipate an attractive return on investment with an IRR of 16.09%, a multiple on invested capital of 2.63, and a cash-on-cash return of 8.19 after a 7-year holding period. To fund this project, I will utilize a 65 to 35% debt-to-equity ratio. Specifically, I anticipate investors will contribute $8.1 million, and the rest will be funded through third-party financing amounting to roughly $15 million. Ideally, for the first 3 years, Stonehill will provide a bridge loan at a 10.8% interest-only rate with a 25-year amortization period. Once the property is stabilized, I will secure a permanent loan with a 6.5% interest rate, also with a 25-year amortization period. While attending the American Lodging Investment Summit, hospitality experts stated that interest rates are likely to lower in the upcoming years. Additionally, after talking with the broker, the seller is willing to do seller financing at a 6% interest rate, which would drastically lower costs. The picture to the bottom left captures a significant moment for me, attending Marriott's Bridging the Gap Summit. During this experience, I learned about Marriott's various initiatives that aim to increase ownership and development of their properties among historically unrepresented groups. With over 30 years of experience, the Fairfield Inn & Suites has over 1,000 hotels in the US and Canada and nearly 300 in the pipeline. Fairfield is one of the strongest and most flexible brands within the Marriott system and thrives within any market. The best part of it all is Marriott's 175 million loyalty members, one of the strongest and most flexible brands of all. Kanza Management has an outstanding has an outstanding performance and the founder, Tracy Prigmore, has managed over 30. Tracy Prigmore, we got this. I know the deal inside and out. Okay. Tracy Prigmore has over 30 years of experience in managing valuable real estate assets. With a multi-million-dollar portfolio under management in 4 states, Kanza Management will manage my hotel. Kanza Management asset manages all properties and strategically outsources accounting and financing, legal, HR, and IT to trusted partners they have worked with for over 6 years. Now, on to the market overview. Part of the Miami and Fort Lauderdale metro area, Tamarack is a thriving community that has experienced significant growth in recent years. With a population of 2 million, Broward County has achieved a 12% population increase from 2010. Additionally, this growth has been accompanied by a 28% median household income increase from 2010 to 2019, signaling economic strength within the community. Additionally, in 2022, the county welcomed 11.8 million visitors who spent a total of $18.8 billion during their stay. The yellow star on the map marks the Fairfield Inn. Located directly adjacent to the hotel is the Colony West Golf Club, which I will touch upon in a few. For the sports fan, the FLA Live Arena with a seating capacity of 20,000 is located 6 miles away and is home to the NHL's Florida Panthers. The Drive Pink Stadium is also located nearby with a capacity of 18,000 and serves as the home to Inter Miami CF. For those needing medical care, the HCA Florida Woodmont Hospital is located 1 mile away, while the Florida Medical Center is located 6 miles away with a combined total of 800 beds. Also in the area, we have the Fort Lauderdale Airport, which serves as the gateway to the city, welcoming over 32 million passengers annually. The area also features several prominent corporate establishments, such as Citrix, Microsoft, Motorola, and Fiserv. Now, for the star of the show and one of the biggest demand generators is the Colony West Golf Club, which was once home to the PGA Tour's Honda Classic and has been ranked by Golf Digest among the top 50 golf courses in the United States. This brand new 11,000 square foot clubhouse offers 5 large meeting and event spaces and a restaurant. Since the Fairfield does not have meeting and event spaces or a restaurant, I will work directly with the golf club to provide that option for guests. The current competitive set consists of 4 hotels: Comfort Suites Sawgrass, Hampton by Hilton Inn and Suites, Hampton by Hilton Inn, and Courtyard Fort Lauderdale. The Fairfield will be the newest and largest addition to the comp set since 2009. I'd also like to mention that the Courtyard Fort Lauderdale was recently acquired and will undergo a PIP right as we enter the market. Since the Courtyard is also a Marriott branded property, this will facilitate a seamless transition for us into the market and help stabilize metrics quickly. Now, on to market projections. Using data from STR, Calibri Labs, and CBRE, I was able to predict future market trends. This graph shows market trends from 2017 to 2030, and the dotted line represents future market trends. The impact of the pandemic is evident in 2020. However, the market quickly rebounded in 2021 and continued to surge into 2022. Additionally, in 2022, the US average occupancy rate was around 54%, while the comp set was at 81.6%. The dotted line on the graph represents the Fairfield Inn, while the solid green lines represent the comp set occupancy. Using data from STR, Calibri Labs, and CBRE, my projections indicate that the Fairfield will achieve a healthy performance upon stabilization, assuming a 2% year-over-year growth rate consistent with inflation. Specifically, my ADR is 156 and a RevPAR of 124. Looking ahead to 2030, my ADR is 178 with a RevPAR of 148. By that point, the hotel will realize $5.5 million in net operating income, in rooms revenue, and $2 million in net operating income. The slight dip in the first year represents the occupancy. However, by year 3, we stabilize, and at the exit year, we're achieving 83.2%, which is slightly higher than the market average. Given that our ADR is higher than our competitors, we expect to achieve similar occupancy rates. Next, I'd like to draw your attention to this graph, which shows the projected penetration index for the next 10 years. If you take a look, in 2023 and 2024, the deal was underwritten so that RevPAR and occupancy does not beat the comp set. However, in year 3, when we stabilize, we're beating the comp set in all 3 metrics. Now, on to risks and exit strategy. Of course, any investment comes with inherent risks, but by taking calculated risks, you can make significant returns. While there are currently staff shortages in the market, I have mitigated this risk by opting for a select service hotel to provide one-on-one service with guests. Additionally, with interest rates rising, I have a plan in place to reevaluate in 3 years when I choose permanent financing. Additionally, with the current climate of uncertainty, this location is particularly well suited for success due to the multitude of diverse demand drivers in the area. And construction is already 95% complete and will be finished in June. Additionally, I will only close once the hotel receives the certificate of occupancy. After 7 years, I plan to sell the Fairfield for an anticipated $31.1 million. And after the lender has been paid, the net proceeds will total $16 million, assuming a 7.25% exit cap rate. Again, that translates to an IRR of 16.09%, a multiple on invested capital of 2.63, and a cash-on-cash return of 8.19% after a 7-year holding period. I would like to say mahalo to all the sponsors who helped make this presentation possible, and I would love to answer any questions.
Great job, McKenna. Awesome. Thank you. Great job. I must ask, how do you say congratulations or good job in Native Hawaiian?
I have no idea.
Sorry to put you on the spot. We clearly did not coordinate that in advance.
No, it's okay. It's okay.
Awesome. Well, let's kick it over to the judges. Kara, would you like to start?
Yes, I would. Good
Great.
job and good job recovering.
Thank you. I appreciate that.
So, being on the West Coast, how did you pick this specific hotel?
Yeah, so I was on Brocadia. I was looking around everywhere, signing up for all the brokerage websites, and I came across this deal, and I was like, wow, there's so many diverse demand drivers, and especially with this market right now, it's so important to have a diverse demand driver. So I found that, I ran the numbers, and I was like, wow, this looks great. Actually, we did secure an LOI, and this kind of came, I underwrote this deal about 3 months ago, but the seller is willing to do seller financing at a 6% interest rate, which would help tremendously. Because with my projections, I have a bridge loan at 10.8% for 3 years with interest only, and then a permanent loan at 6.5%.
Did you do any of the math on that?
I did. Would you be able to bring up my slides?
Matt, can you beat that seller financing?
On the revised interest rate.
No.
Yes, I do. I do.
We can fix around 9.5.
Or can they bring it up?
What number slide?
It should be in the appendix, slide 2. Keep going down, or I can do it. All right, here we go. So I did do a purchase price of $23 million instead of $22 because that's what they wanted. So the returns are slightly better, but they're about the same.
How long are you holding the seller financing in this?
This one's for 7 years also.
All 7 years.
Yeah.
And that's through 81?
Through 81, yes. With different management though.
Okay.
Yeah.
And then a quick question just about the construction.
Yeah.
Taking 3-4 years. What are you doing to mitigate, and why did it take so long? And then are you going to get comfortable with the overall integrity, the finishes, the millwork, just all the final finishes of the hotel?
Yeah, so construction did start in 2019. Of course, COVID hit and everything just kind of slowed down. So the biggest part about this deal is I'm not closing until the hotel receives the certificate of occupancy. So, you know, if the hotel doesn't receive the certificate of occupancy, I am not closing.
Okay. And then did you, that courtyard that sold, I know it's an older asset. It
Yeah.
looks that way. Probably, you know, not as comparable there. But did you get the sale price for that asset?
I did not, no.
Sarah.
Thanks. Great job.
Thank you.
Loved the deck and the branding at the beginning.
Thank you, I
Fantastic
appreciate
job
it.
with that. One of my questions was about, and again, I really like this deal profile, buying a new hotel and stepping right into cash flow. And this was in your model with not seller financing model, but the traditional financing, if you will. Did you capitalize interest reserves for year one? It looked like you had a pretty hefty closing and financing cost line in your sources, but I wasn't sure if you had working capital or interest reserve to get you through that first year.
So, that's something I'd have to figure out. I definitely will go back in and figure that out, but right now, I don't have the answer, but I can definitely get that for you.
It will depend when you close.
Yeah,
Seasonality,
definitely.
How much you need or if you need it.
Yeah.
Darian.
Great job.
Thank you.
And being close to Fort Lauderdale is key these days. They did phenomenal during the pandemic. Talk to us a little bit about, you know, construction is now on the horizon of being completed. So, and you're not in the box, so to speak, right now, but talk to us a little bit behind the scenes on what you're doing to get ready in terms of hiring a GM, hiring staff, what's on the horizon there, and what's being done in terms of planning. And then what are the synergy opportunities you see as it relates to the Colony Golf Club?
Yeah, so to answer your first question, we're hiring Kanza Management, so they'll do the hiring and the GMs and all that. We don't have everything quite figured out yet, but that is in planning. And then would you be able to repeat your second question?
Potential synergies with the Colony Golf Club.
Yeah, so the Colony Golf Club, like how we'll kind of work together?
Sure.
Yeah, definitely. So I think the biggest thing is helping each other out when they do lots of weddings, they do quinceañeras, they do parties, everything, corporate events. So when they book people, directing them to the hotel and saying, hey, I know you're having a wedding here. Do you need a place to stay? We have a hotel next door. And same for us. We have guests staying here at the hotel, and they're like, I want to eat somewhere. We can say, go over to the golf club. They have an amazing restaurant. Or I want to have a corporate meeting last minute, and we can direct them to the golf club. So it goes hand in hand, communicating with both the golf club and the hotel.
Okay, with your mitigating factors from construction, and you mentioned you wouldn't take ownership until they had their C of O. If that C of O is not attained by next year or a year after, where's your cutoff for taking control of the property? And number two, I'm not sure if you had an opportunity to really dig in to see who their FF&E manager was and where that was in with supply chain and the way that's going now.
Yeah. So, sorry, can you repeat that first question again?
Sure. Did you have in your mitigating factors if you did not take over the hotel with their C of O, if it moved to next year? What your cost or pricing would be, or would you just not take ownership?
Yeah. Honestly, I don't see that happening. It's already so far along. If something did happen again, there would be a cutoff line. They are supposed to have it done by June. Say they don't have it done until it's going to be another year. we would not proceed with this deal. And then for your second question.
Second question, were you familiar if they had the FF&E ordered already from their supply and who was actually your FF&E supplier?
I did not.
Question for you. My understanding is that this has been almost a year in the making. Can you talk to us a little bit about the preparation process and maybe who was involved in kind of coaching you along the way and maybe anything that you learned along the way?
Yeah, so I originally had a coach. It didn't really work out, and I kind of just picked up a bunch of coaches from everybody. So Tracy helped me out, Morgan, Emma Claire, Viviana, pretty much everybody. So they all kind of adopted me, and they helped me out and helped me through this deal. Of course, the broker, Harry Monsita, he was tremendously helpful. He drove an hour. Well, I mean, I flew 10 hours, but he drove an hour to give me a tour of the hotel. Of course, all the support from my family. And yeah, it's been an amazing experience, and it's been so cool to work on a deal and getting to see it actually come to life. It's wonderful.
Awesome. Well, thank you so much. You rounded us out very nicely.
Thank you.
Thank you so much. I'm going to let you catch back up with Genesis backstage, if you don't mind.
Awesome.
Nice job. Nice job. I cannot believe we've gotten through all 5. I could probably do this all day. It's incredibly heartwarming. All right, so you have seen your last pitch of the day, and now it's your turn to finalize voting. I'm a broken record, so scan the QR code, please. This is for pitch number 5. Go to the app to rate the pitch. Great. Genesis will now catch up with McKenna Price backstage to get her thoughts on her pitch and the judges' comments.
Thank you. McKenna, you did amazing. Solo and everything. How do you feel?
Thank you. You know, I feel great. I think the nerves got to me a little bit, but the biggest thing is I know this deal inside and out, and I gave it my all. And I think just this has been an amazing learning opportunity, and being able to get to see this deal come to life is going to be such a wonderful opportunity in itself.
Yeah, absolutely. Okay, so in the beginning you were talking about your family.
Yeah.
I want to know how they inspired you. Tell me more.
Yeah, so my dad, he was born in Hawaii too, a lot of my family, and I kind of grew up in Hawaii during the summers. My family means so much to me, and every time I've gone to Hawaii, everyone is so hospitable. It runs in my family. They're always like, eat, here's some food, or like, I don't know, like just always, my grandma always giving me things, just super caring, and the culture is so close-knit, and they really care about their people, and the biggest thing is providing hospitality and expecting nothing in return, and I think that's something that we really need to adopt here. So yeah.
I love that. I love that. So I wanted to know, like, what motivated you to join the SHaD program? How did you even find out about it?
Yeah, so I have always loved hotels ever since I was like 4. Everybody thought it was the weirdest thing, but I went to Washington State University. I saw Emma Claire Spring do it, and I was like, oh my gosh, they make something like this? Like, I didn't even know it existed.
Yeah.
And so I spoke with Emma a little bit, and I was like, I want to do this.
I love that.
Yeah.
So when preparing for this, and you mentioned a lot of mentors that helped you through this process, like what was like a really big like takeaway or something that you just did not know and you wouldn't have known if you hadn't been in this program?
Like everything, literally. Like the amount of knowledge I have soaked up in the past year has been crazy.
Yeah.
I have learned, like Washington State University, their curriculum is very operational focused, and so this has gave me like a whole new side of things with the investment side, development, everything.
Awesome. Okay, so last question. I wanted to know, what advice would you give women next year that are in your shoes?
Honestly, take advantage of the moment. Like, use this opportunity to soak everything up, but also meet people along the way. Like, the industry is so small, and I've made so many close friends. Like, I have so many friends now, and it's just amazing. So using the opportunity to network and make some lifelong connections.
I love it. Okay, I'm sorry. Now I have one more question.
Okay.
So where do you see yourself in the next 5 to 10 years?
So I definitely want to own hotels. As of now, I just accepted a job at TLT Solutions with Tracy Prigmore.
Oh, wow, that is a good job to have.
Yes.
That's amazing. Congrats.
Thank you. So I start work on Monday.
You're right into it.
Yeah. And additionally with that, like, she's working on the deal, so I'm going to be able to work on the deal with her, which is
amazing
like,
opportunity.
yeah, it's so exciting.
So what is your exact role of TLT Solutions?
My role is Hotel Ownership Fellowship.
Got it. Okay, well, I enjoyed this.
Thank you.
You did an amazing job. Thank you so much.
Appreciate
Congrats.
it.
All right. Thank you, McKenna. Before we go over to Tracy for our last Shad Talk, let's hear from our last sponsor of the day, Choice Hotels.
Only one woman for every 9.4 men holds investment or development positions in the hospitality industry, and the number of female hotel owners is not representative of the industry's diverse consumers. This is because female entrepreneurs have access to less financing than men and get smaller loans at higher interest rates on average. It's time to rebalance the scales of opportunity. As an organization who has been at the forefront of empowerment in hospitality for over 20 years, Choice Hotels is now investing more than ever to help women become a force in the industry. Introducing Hotels by Choice Hotels, a program designed by women for women to make the dream of hotel ownership more attainable for women worldwide. It's our mission to support and empower female entrepreneurs through dedicated training, turnkey solutions, and financial guidance. To reach underrepresented groups, Choice Hotels remains the first and only hotel company with dedicated personnel solely focused on extending opportunities in hotel ownership. And with more women investors, enthusiasts, innovators, and up-and-comers in the hospitality industry than ever before, there's never been a better time than now. Hotels by Choice Hotels, building equity through hospitality.
Awesome. Well, it has been an incredible morning/afternoon. And I just want to give a quick shout out to Genesis in the back. It's been a business up front, but it's been a party in the back. So thank you to Genesis. Also, thank you to everyone here in the room, as well as those who are online. These women, they feel your love and support. And so thank you for extending your support to these women today. All right, one more time. Voting closes in 30 minutes. So don't forget to cast your Viewer's Choice Award vote for your favorite pitch presentation. And we'll announce the winners at the awards luncheon this afternoon. So vote, vote, vote. And as I mentioned earlier this morning, if you've ranked the pitches or vote now, make sure you provide your details because you will be entered in the raffle that is happening at the luncheon in about an hour. So we hope you've enjoyed the program and all that you've been able to glean from some of the key takeaways from your experience with SHaDPitch 2023. And perhaps some of you will want to become hotel owners, investors, developers, or maybe even participate in a future pitch competition or invest in some of these lovely ladies that you've heard from today. So if you'd like to learn more about SHAD's upcoming programming and initiatives, head on over to SheHasADeal.com. We also would love if you would help spread the word on social media. So follow She Has a Deal, make sure that you're posting SHaDPitch 2023, and share what moved you most during today's event. So we really appreciate if you could help spread the word on social media so that we can amplify the wonderful work that Tracy does. So there's more to come during our SHaDPitch 2023 awards with our luncheon. It's right across the street at the Marriott Hotel. For those of you who are tuning in live, do that at about 2 o'clock so you can see who the winners are right along with us, which would be great. And for that reminder, it's a $50,000 first place prize. So these women have worked incredibly hard and deserve our support, and looking forward to seeing who will win. It would not be today if we did not give our fearless leader and inspirational SHAD founder and leader, Tracy Prigmore, a big round of applause and acknowledgement for all that she is doing for these women. Yes. So thank you, Tracy. And with that, we are going to head on over next door and make sure you vote. All right? Pardon? Oh,
She's brilliant and bold.